Thank you so much. Okay, here we go. So good afternoon, ladies and gentlemen. My name is Martha Montoya, and I am the founder and CEO of Ag Tools. I have developed many crops from seed all the way to consumer hands. I have overseen supply chains and operations across the world for multinationals, and varies from Mexico to United States, or I have done orange juice concentrate from Brazil to Australia, or I have done even spargos from Peru to France. And throughout my 27-year career, I have seen firsthand what you're going to start seeing today, which is the problem. The problem is the agricultural and food supply chain is fragmented with many contributors and large graphic. Just walk into a supermarket and just look at each one of the tags on your products, and you'll see many countries from all over the world. And so because of that, I have seen how the lack of data impacts the farmers across the street and across the globe. You see, for centuries, farmers have just harvested without any data, and heck, even no data whatsoever, literally. And so is the same thing for all the buyers and across the globe, literally supermarkets, processing plants, trucking companies, vessels. Lack of accurate data across everyone, causing 6,900 truckloads per day wasted from farm to distribution centers. And so everyone in this food supply chain is literally disconnected, and they're using inadequate information. It's causing obviously inefficiencies, the lack of transparency, and there's a common denominator across all of them, which is very thin margin, razor thin margins. And we know that because we actually interview our already existing customers, and they tell us $5 billion, $25 billion companies, they use the phone to talk to each other to find out what's going on in the market. Or they use USDA or Department of Agriculture, which are legacy systems, which are aggregators of many other systems that are also legacy. So literally everybody is either misinformed and or wrongly informed. And so finally, after many years of frustration, I decided that I wanted to call on my two brothers to try to make this a better place. And Gustavo Montoya, which is my first brother, he was one of the first engineers of Amazon, but more important, he's a database actually from UCI whole ecosystem. And also I worked on the meteorology world. And then Oscar, my second brother, who is an aerospace engineer. So he looks at the world from outside, and that's why I think the accurate algorithms that we have been creating, because he has a completely different vision of the world. And we are inviting many wonderful team members that are they're full-time, they're advisors, they're mentors, to put together what we call the Bloomberg or Reuters of the agricultural industry. And by the way, Bloomberg, I already found out, is a $10 billion company. Reuters is a $6 billion company. So we're targeting those numbers. And here you can see the fastest food and ag growing segment is the specialty crop. Think about it. The whole world is moving to fruits, vegetables, nuts, herbs, and yes, hemp. And by the way, we have our first customer on hemp because it's a specialty crop. We have over 270 million data points when we talk to each other in the past couple months, over 120. We already have 270. That's one of our strengths, our databases. And we move this at a 1 billion transaction per second. And again, 76 points of variables are the ones who impact our supply chain, not only on food, but in the whole world. So we deliver what we call an intuitive and readable different forms and shapes. You can see the mobile, you can see the TV screens, you can see the TV monitors. Now we have products, the ability to take the data of the customer against our data so they can have real time what's going on. And then we have the 4 a.m. reports. We make them actionable to get into our tool. And when we started this route with all of you, many of you, we started at $199 per month per commodity per item. And now, guess what? We have grown from $1,700 per month, and our first $20,000 per month customer is coming on board. So we have been growing the business as we promised we were going to do to our seed investors. The data origin, very important for you for me to stop for a second, because I've been told for the last even 3 months by macro investment funds that we have what very few people have, which is, yes, everybody can download government data. Very few people understand how to scrape it, how to clean it, how to monitor, and how to really audit it. But because we understand the industry, we're able to produce good data that, as one of the investors said, anybody can create algorithms, machine learning, AIs, but if you have wrong data, it doesn't matter. So we have that. And then the second element I want to point is what we call Apex in our stack of technology. And that Apex is very crucial because that's where we take all our repository of all the commodities of every variety, of every region, and between economy scientists and agronomists, we are able to produce clean products. So here's an example of a farmer, Oxnard. She looks at the data, she sees how the market is behaving, sees that the market is going down in New York, going up in Chicago, reroute me the truck, makes more money. Or vice versa. We're now seeing our customers that are the buyers. I see weather patterns that are wrong. Why are we still having that product origin from this area instead of different region? So we have our products on the shelves. So one commodity, 1 month per user is around $2,400 a year. Well, one truck that you see up and down the freeway, it's $35,000 to $50,000 running up and down the freeway. And so if they save one truckload a year, they already pay the membership. So our customers are from, when we started this route, the Greenways, the Dudas, the Driscolls, the customers that we all knew, the large farm operations. And in the past 3 months, we have added Food Buy, one of the largest distribution for food service in the world, literally, or the Dole for pineapple, or even the Boston Consulting Group, which is the financial entity who is now doing studies about carrots. Who would have thought? Because it's the fastest growing segment in the world. And so the numbers are starting to talk. We have not increased customers purposely because we were doing what the seed round was telling us. Get your act a little bit better together on the front end, get your act get better in the technology stack, so we could move where we're moving now, which is large customers, and you will see it in a minute. Then you will see the milestones for this year. We start with the Act Capture, and if you see our deck, even a month ago, we didn't have Act Plug, which is taking data from the customers, all the distribution centers against our data. Now in real time, they can see how much money they're making or losing. The CPUC approval, which is putting us more into corporate America, even any of the customers that we want, they ask corporate, they ask us for the certificate. Obviously, we fundraise. We got approved to 2 of the best incubators, or I'm sorry, accelerators, called the Techstars and the Plug and Play. Game changer, 100% for getting to the Cargills, the Eco Labs, the Brewer Bank that we now have for hemp. And then the launching of our channel enterprise program, it was a wonderful ride with Microsoft. Not only now we're with them, now we're adding to Amazon and IBM, etc. And then the one thing that we had to do, which is how do we make all this, create our catalog for patents, and Panasonic IdeaShip has been an amazing partner on this because they are non-biased to make sure that we get the best of all the patents that we have to potentially apply. We don't have a legal counsel yet. We have all this organization helping us put it together so we can go for it. So we're going after what you call the specialty crop, which is a $1.8 trillion per year. And that's specialty crop by itself in 23 industries. And then that's what we're going to go after. We have exit or partnership strategies. We're starting to hear already from the customers that you're hearing me talk. They're asking, how can we partner larger? Can we invest on you? Can we bring you in different shapes and forms? Whether it's the financial institutions, whether it's the big data companies, whether it's the equipment farm companies or the agrochemicals. We're relevant, we're highly scalable, we're definitely very important. The architectural is for any commodities. That's why with one of our customers, we're starting with produce, moving into seafood and meat. They are paying the bill to do that, which is great. So it doesn't come from our investors, but from customer. Established partners, channel partners, which is good, patent catalog, and highly experienced team. And that's it.
Oh, excellent. And we have a few minutes left. If you have questions, we'll tag this on to the question period. If you have questions, please raise your hand in the participant panel and I'll call them. And then probably about midway through, we'll just open it up for either questions and or general comments. Minda, you're up and running.
All right, thanks. Great presentation. I really enjoyed sort of a very data-focused point of view on this. And I just was curious if you could go a level down and talk a little bit about the specific business users that are using this and what frequency of access are they having with your data? How frequently is your data changing and how often is that relevant to them? And what kind of business processes are being driven?
You'll be shocked to know that this data has to, well, it's updating every 10 seconds to 15 seconds, and mainly because our industry changes by the minute. We can start at 4 a.m. with a $20 box, and by 6 a.m. being a $2 box. And so it has to be updated every so many seconds. The first customers and the original and the ones that are still, and we're growing that segment, is the farmers, but not these individual farmers, but the large farming operations who in turn have more farmers underneath them. Because going instead of each farmer at a time, it would be better to go after a large organization who not only gives us the customer base, but also the feedback to make that tool better instead of the farmer. So that's the first segment of customers that we had. And then the second segment of the customer was the buyers. And to that, we had to prepare ourselves, which has the seed money has allowed us to bring a couple people that help us cross the line, which with our first customer, which is Food Buy, for example, where we now understand how they can use the data, and how they can use the data is how we knew that they needed the data, but in how fast, how often, or how relevant, or in reports. So reports are important for retailers every week, but for farmers every day. So two different worlds. And so we have what we call configuration to click fast and convert those customers without having to do tailor anything or consulting anything, because that's a whole different business model. So that's more or less the answer of your question.
If we can make the answers a little shorter, we're getting a lot more questions. I'm going to go to Jeff, then Catherine, and then I'll go online with some questions. Jeffrey Clark.
Yep, thanks, Martha. And if you could just walk through a little bit on what the patent portfolio looks like after you do spend the time and the money on that, and so, what sort of protection that you're seeking from that.
We have had mixed feedback on that from the CTO of Cargill, who says first to market is more important than how many patents you patent, to those who say you have to patent everything, right? So what we have taken is, we have right now 30 items on the catalog that we think we're going to finish in the next week or so, confirming. And then we will make a decision on what we really want to patent and which one we want to just keep on the side. But what we want is to show our Series A investors that we have done the work and we have the secret sauce, but maybe we don't want to publish it yet. So there are around 30 elements or 30 topics or 30 different ways, because it's between design, algorithms, way we clean the data that we are finishing. And then also within that whole thinking process is the fact that how many countries or which countries do we launch automatically that are relevant to the ag industry. So more or less that's the answer. It's a little bit complex. And we are this Ideaship and Panasonic are investors on the company, so we're not spending money, which is a good thing. We will spend the money on the filing with the attorneys.
All right, going to Catherine, and then I'll go online, and then we'll come back to the participants. Catherine Chu.
Thank you. Sorry, I was muted. Martha, you have a huge supply chain. You try to serve multiple players in that chain, starting with farms. Can you please describe to us the use case? How do the farms use your platform? What data do they access? In what way do you add value? And then now you're adding the buyer. So if you can connect the dots for us to describe a use case, please. I have a second question also about your plan for a raise. And what your perspectives are at this point on your potential exit value.
So the answer to who uses the tool? Farmers and buyers. If I had the right, if I could do it right, buyers are number one, because how buyers buy impact farmers. We have buyers sitting in desks that never visited a farm in their lives, and so they don't understand the industry. So if they start understanding the tool and understanding how to use it, they will make better decisions that will help the farmers. So let me go back to how they manage it. So I am a buyer of broccoli, and I am sitting on my desk in North Carolina. I need broccoli year round. I have no idea where to get it. That's not the problem. It's where it's coming from. So the tool will give them a landscape for the last 25 years, where broccoli comes from, where, how much, what's the volume, what are the prices, what are the retail prices. So it gives them in literally 10 minutes, the whole 20 years of broccoli. So even if I never knew anything of broccoli, I would know in seconds how broccoli, where they come from. Now I can call the suppliers and tell them, or the farmers, and say, I want broccoli these times of the year from these regions in particular. The farmers.
Oh, okay, but you started with farmers, so tell us about how the farmers are using.
So that's what I said. So we start with the buyers. Now the farmer side of it, what has happened all our lives, Catherine, is that the farmers go to the buyers and hope and promise things, but the buyers change the thinking process because they don't know the industry. Now the farmers can sit down and say, okay, because you have this data, we can provide the broccoli from the same regions that you are looking into this data, versus you wondering to get broccoli on June, the first week of June in Chicago, when every single year there's a storm in Chicago and we can get to Chicago with broccoli. So the farmers are, the transparency now that exists between buyers and farmers is helping them plan and forecast versus react. So the farmers now can plan and plant, literally plant around the market and not around the crops themselves. And then the second part you asked is about the
Exit valuation.
Oh, exit valuation. Well, I don't have an exit valuation yet because we're still growing the business, but we're hoping that on the 5th year, we're going to be producing somewhere around $120, $150 million minimum to be able to do a valuation and look into an exit potential.
All right.
In your deck, you had specified 72 million as a bottom, up to 100 million. If I give you even 10x based on your projection, it's 150 million. But you said also that you were trying to raise 25. So I'm actually a little baffled as to what the ROI might be for the investor. That's my question. That's why my question.
Yeah, and I will rewrite that. I have in the last two, remember, we finished seed round and then we started Series A, and having several conversations with several, and sitting down every Friday to go over this and where we're growing. We're going after 10 million, not 20 million. So let me double check. Let me rectify that. We're going after 10 million with a $43 million valuation. And again, this just came in the last week because we're just growing as we go. So the investors can receive somewhere between 18 to 20% on return on investment on the Series A.
All right, we got a lot of questions and we will not get through them. Let me go through them real quick. What has been the impact of coronavirus on your milestones and plan?
No, it has helped us because it's because the whole world understands now supply chain. Even if you read a couple articles last night on Wall Street Journal, supply chain is on the front hand of everybody. So it has helped us, and we're acquiring customers as we said we were going to do it. So we're fine. We're growing good. In fact, retailers and buyers are like the Cargills of the world. Risk management is one of the biggest issues right now.
All right, so speaking about risks, what are your biggest worries and the risks on your business?
The biggest risk is acquiring enough engineers that understand this industry. That's the risk. It's hard to get engineers. Engineers are 20,000 a year anywhere, but understanding our industry we have had couple rotations there because it's an industry that very few understand. That's number one risk. I would say number two risk, I would say that's my biggest right now concern is the right engineers to work with Gustavo.
All right, what are the deals of the current fundraise?
What are the deals?
What's the deal terms? Deal terms.
Don't have it today. I'm sorry, David. Just because again, we just finished in the last, it's only what I know is the 10 million with a 43 pre-seed, okay. I mean, pre-value.
All right, I'm going to go back online to the participants. Amy, then Jim, then Damien.
Hi, thanks for the presentation. I was wondering if you can give us a high-level value statement around the environmental benefits. Some of us are here representing clean tech funds, and actually know one of your investors up here in E8. So I know it has those aspects, and I think it's about food waste and all of that. But if you could just share that with us, I think that'd be helpful to a bunch of the judges.
Please, you ask me that, Amy, because if I mention that, that's not kind of so much sexy in the world of investment world. But guess what? We're getting the calls from the Boston group or the investment funds where corporate is having such pressure of a zero footprint. And guess what? Now with this tool, they can calculate how many trucks they save, and so how much carbon footprint goes in there. And the calculator that we launch on January will actually have spell down every single element from water to soil to, because I used to do that. I had to put together all the things that we use in order to ship the product. So now with the calculator that we launch on January, not only you will see how the corporate customers will see not only how much they're buying, where they're buying, volumes and all that, but they're going to see the carbon footprint of each truck that they buy from wherever they buy, or each container where they go. So with Dole, we're working on that, and the ports, because the ports are the most contaminated in the whole Port Wanimi here is the one we'll be working with Dole to do the calculations on that.
Right. I got two other quick questions, and they have to be done within a minute for the answers. I'll go to Jim for a quick question, and then Damien, and then we'll wrap it up.
Yeah. Hey, Martha, Jim Houston. This is all built on data, which is great, but how two quick questions. So how do you ensure the data is clean, and can your platform deal with proprietary data?
How do we know the data is clean? We have a system, we have created a systems that when there is, because we have 27 years of historical data, you see growth or is low, we have a monitoring system that actually sends alert systems to my technology team to tell us when something is completely off. We literally have become the audit of the government institutions. We're actually going to ask for a contract on that because they are making so many mistakes on the front end that is not even funny anymore. So we're trying to go with Microtech, one of our partners, to propose as our technology for the government. And the second question, Jim, was?
I'm sorry, can you deal with proprietary data?
The proprietary data is we have a system where we take, let's say, strawberries. We have today a meeting with the California Strawberry Commission. So we have all the varieties of all the strawberries with all the different variables that happen to them, which are 31. And so with that, we're able to take the variety against the region and predict the volumes. So
right, last question from Damien. Very short question, very short answer, please, so we stay on target.
Sure. So I understand from your presentation that you you already have customers, and it sounds like you're gathering a lot of publicly available data, but you haven't filed for any IP protection yet. So I'm just wondering, what's to stop a competitor from copying your solution?
Nothing stops a competitor right now, but on the other hand, believe me, it's very complex and very, very complex. And so we can't stop it, but we're right now, as I mentioned, we will be filing in the next 30 days.
All right. Just to remind you, Damien is with Kenobi Martins. That's probably why the question came up. No,
I know.
No problem.
I actually took note. Charlie's on the line, so I said, Charlie, take note.
All right. So anyway, thank you very much, Martha. Sorry we couldn't get to more questions.
Are we out of time?
Yes.
We're out of time.
We are out of time. All right. So the link in the chat, Stephen, can you post the link again for AG Tools? If you are logged into fsuccess.com, by clicking on the link that Stephen just pasted in there, you'll be able to, it will take you directly to the evaluation page to evaluate this AG Tools right now. So while we're transitioning, I'm going to transition from AG Tools to CAS21. Does anyone have a comment or a suggestion for Martha? Raise your hand, and we'll let you make that comment or suggestion. Anyone? Not a question. Okay, Gerard, you go for it.
Hang on, I'm trying to get unmuted.
There you go. We can hear you now.
Okay. Martha, I very much appreciate your focus on the specialty crops. I would just add, as an investor in the Orange County Fund, I think you have an opportunity to become the Bloomberg of the grain industry, which is not your target market. I mean, wheat, corn, soybeans, all of those people who don't have the need for the kind of data that strawberry farmers do. But I think that if you could get an access to some weather information, it would mean everything to wheat farmers in Eastern Washington to know what's happening to the soil in the Ukraine and Russia, and likewise for the soybean farmers to know what's happening with subsurface temperatures with El Nino, La Nina, and all of that. And I just encourage you to try to find a way to break into that market, which is huge. And if you can offer information advantage to the farmers and to the grain co-ops that would put them on equal footing to the big boys like Cargill, I think you have a gold mine.
All right,
Thank you.
Martha, I'm going to move you to attendees while we have Ashley set up. You can listen to one more comment from Jeff. So Jeff, go ahead. Jeff, go
Yeah,
ahead.
just briefly, I appreciate that you are beginning to generate some numbers about sales like CAC and LTV. It's very important for investors to see your projections. We want to see where you think revenue and profitability is going and that that's well supported. It's also important to be able to consider your valuation, because your valuation right now based against your revenue is very, very difficult to support.
Thank you, Jeff, very much. I hope everyone had a chance to evaluate while we're doing transitions. Cast 21, let's start when you're ready. Ashley.
Thank you so much. Well, the days of itchy, bulky orthopedic casts are over. My name is Ashley Moy, and at Cast 21, we've developed bone and joint solutions that decrease medical frustrations and elevate the patient experience. Our co-founder, Jason, has been in over 60 casts and braces in his lifetime. He is super familiar with the antiquated, bacteria-laden, and smelly standard of care that we've been using for literally centuries. These products don't just cause patient discomfort issues, but it turns out they have a lot of negative clinical and financial outcomes for the entire healthcare industry. We've instead developed a superior solution to bone and joint care. We have a solution that is rigid, waterproof, lightweight, and comfortable for the patient, but it's also efficient and safer for the doctors to use over the standard of care. Our product can be used without any auxiliary tools or capital equipment, and we've overcome our regulatory hurdles and are now commercially available across the country. To use our technology, it starts as a flexible hollow sleeve that the patient can slide on, much like they would put on a glove. Then a medical professional can take a pack of liquid and connect it to this hollow sleeve, where the liquid will flow from the pack into the sleeve, where it'll ultimately harden into a rigid solid. During this liquid to hardening phase, the product can actually be molded to fit the patient's really unique contour and body shape, getting a customizable fit. Doctors and patients are really loving our solution, which makes us so happy. People are calling it a better fit for the orthopedic practice, the art of medicine, and a much more livable way of healing. Our product is the only option on the market that keeps the patient experience and the provider's experience in mind. We provide a solution that is truly more comfortable and livable for the patients, and are able to be, again, have those really contoured and nuanced moldability aspects while still being able to take advantage of mass manufacturing, therefore keeping the cost a lot more affordable. As I mentioned, no capital equipment, tools, or even modern day luxuries such as clean water are necessary to use our product. We can use our technology in the clinics, on the sidelines, and even in developing nations and in disaster zones or military areas. We bring standardization to the application and removal process that doesn't exist today, and therefore our process is much faster to apply and more efficient overall. Our technology platform can be used for all different parts of the body and even other species. But today we're starting with a niche of the market that focuses on humans with wrist fractures treated by clinicians, orthopedic specialists that specifically work in private practices. We entered the market through a limited market release. We worked with just a handful of clinics in order to validate our hypotheses for product market fit and stress test our operations. We collected patient data and clinical data during these times in order to execute on a two-front marketing campaign for the patients and for the clinicians, something very unique for medical devices. We also use this information to help us scale our operations, which we're really excited to be going through right now. And we just started working with distributors and having really meaningful supply chain partnerships to help us expand thoughtfully. Our management team is run by myself and Veronica Hogg. We've been working together for about 3.5 years now. And together we've worked for other healthcare organizations, including startups, doing business development for them and validating medical technologies and products for major Fortune 500 companies. Our business model relies on a recurring revenue model where doctors continue to purchase from us as they use the product with their patients. The arrows here on this slide show the flow of money. So doctors pay us as they continue to use the product, and then they get reimbursed either through insurance or the patients. We don't have our own insurance code. However, our closest like product does, and private and public insurers have been reimbursing on this code. It's worth pointing out that 80% of the time, though, doctors are asking patients to self-pay instead. We know that they're doing this for reasons whether to get paid sooner before the patient leaves the actual clinic or to have an extra business and revenue opportunity for them. In our first 3 years, we were very excited to design, conceptualize, validate, verify, and commercialize a medical device through regulatory hurdles. We now have domestic and international patents pending. Our product is manufactured here in the United States. We started our first clinical pilot last year, and we're using that data today to do a clinical investigation and study. We actually just started full commercialization of our product in March of this year, and we're already seeing fantastic growth quarter over quarter, and our product is available in all 5 major US territories. We've raised to date $2.1 million on safe notes in a seed round. Our seed round is led by one of the premier musculoskeletal venture firms in the country. And it's worth noting that major players such as Smith & Nephew, Medtronic, Wright Medical are LPs in that fund. Looking forward, we have projected some really aggressive but exciting financial goals for us ahead. And we are anticipating a large majority of this incoming revenue in the future to rely on recurring revenue. We currently know that our customers buy about 5 products every month. We don't plan on doing this alone. We are looking to increase resources by $2 million in our Series A fundraising. We're looking to do this on a $10 million pre-money valuation. We'll be using the funds in 3 key areas that are necessary for us to achieve that expansive growth. This is in production, operations, and delivery. We plan to thoughtfully spend this money over the next 18 months in these key areas, specifically to release new product sizes and new products. For example, today, we actually only have 2 product sizes available. We also want to implement automated and semi-automated processes to help us make our processes more efficient. Our team just became 4 people small, or 4 people large, I should say, as of last week. So we really are looking forward to expanding our team in the future, as well as launching additional product improvements and new products in the next coming year. So in summary, we have launched and commercialized a really patient and provider-friendly solution to bone and joint care. We have really aggressive and thoughtfully planned expansion that we plan on working with all of our partners in production, operations, and delivery to achieve. We're so excited that today, yes, we're creating a product to help heal broken bones. But as you can see in this second photo here, our platform of healing has unleashed creativity in these clinicians who are using our product for other things like augmented bone stimulation. We want to help grow and keep up with their imaginations by increasing our funds in our first priced round, our Series A, and we look to do that on a $10 million pre-money valuation. Thank you very much.
All right, so I'm going to go online first. with a couple of questions and then come back to the participant panel. What were the results of your first clinical trial? This is from Moran Weissman.
Yes, we are actually in the process of still running that right now. So we're about halfway through, but 100% of the patients treated with our product have confirmed healing.
All right, and when do you expect to get an insurance code?
We're working on our insurance studies, then we hope to launch those next year. So as far as our own insurance code, probably not likely for the next 3 years, but following in the footsteps of our other competitors, this is not far from par for the course.
Got it. Okay, and then from Dr. Greg Bouchard, why aren't you selling to emergency departments where most casts or splints get placed first?
If you can see here, our product is circumferential. So we are working on a product that is meant for more acute care, doc, but this one specifically is for those stable distal radial, distal ulnar fractures that are most commonly seen across all age groups and that are treated in a less busy environment like an orthopedic clinic where we have more face time with the buyers.
Got it. Okay, I'm going to go back to the participant panel. I'm going to do Tony, Barbara, and then Catherine. Tony?
Yeah, yes, Ashley, great idea. You know, my daughter broke her ankle last year, and I could see how this would be really, really neat. Question I have is, my understanding is you can jump into a shower with something like this, or no?
Yes, sir, you can.
Okay, so you can, and then what about the strength? If you were to put this on a broken ankle, and the doctor says, okay, for a while you'll be on a crutch, but eventually you'll walk on, is it going to be strong enough to walk on?
The product here today is not meant for that cyclic load handling. As far as the strength goes, though, we have run it through ASTM standard testing to compare it to fiberglass casts for the arm. Our product performs on par or better in some cases. For example, when you hit a fiberglass cast and you hit ours with the same amount of force, a fiberglass cast will permanently bend and deform, and you have to run to the ER and get that taken care of. Our product actually bounces back to its original shape and acts much like a helmet or a crutch. We are developing those lower limb products, but today I can't say for certain what the strength is for those cyclic load handlings.
Right.
Okay,
and,
thank you.
All right, so we're going to go to Barbara, then Catherine, and then Thomas Lee. One question each, please.
Sure. Ashley, it's a great presentation. A couple things. So you don't really describe the genesis of the product. I fully expected to see orthopedic surgeons that were sick and tired of, you know, plaster and all the old school stuff. So I found that a little challenging. I was hoping that you could give us, do you have are you licensing this product? Can you give us a little background? And if it was in a previous deck, I apologize.
No worries. So as far as our genesis story goes, it actually started as a senior capstone project in university, again, stemming from Jason's experiences as a patient. And then as we developed the product and branched out, we are now working with orthopedic surgeons, emergency medicine physicians, cast technicians, and medical assistants to further develop and promote our product. We are not licensing the technology at this time. We are selling direct. And we just, as I mentioned, had our first regional distribution agreement signed.
Okay, Thomas Lee. I'm sorry, Catherine, and then Thomas Lee. Sorry, Catherine.
That's all right. Thank you. Ashley, innovative product for sure.
Yeah.
I was confused looking at your information and also listened to you talk just now, whether you guys actually ever went through FDA. Is this a product that requires FDA clearance? Do you need to make claims? How does that work? And yeah, reimbursement code, please comment on that.
Yes, absolutely. Apologies for not being more clear. We have the regulatory hurdles specific for our class of product. That does not include clearance or approval. Those are actually like legal medical terms related to FDA products. So our product and process is separate from that, but we have overcome all of those regulatory hurdles and it's complete. You can actually find our product and our company on the FDA website. As I mentioned, we don't have our own reimbursement code today. That's something that we're doing studies on. And again, we hope to be launching those next year. However, our closest related product, and it's very similar to our product today, that code is currently being used. So after looking at the data and looking to see how the reimbursement is being covered by private and public payers, which it is today, as I mentioned, then we'll make that determination to apply for approval under the existing code or our own code.
All right, and I'm going to go to Thomas Lee, and then we'll go back online. Thomas?
Yeah. What is the cost of the application of your cast versus the fiberglass? And could you clarify that the provider has to actually purchase this initially and then seek reimbursement from the patient? Is that correct?
Yes. So for your second question, that's actually how a lot of medical products are today, which is how and why the insurance industry works. So the doctors purchase the product up front, and then the insurance reimburses it once they use the product. So we don't do any consignment models here. And as far as the cost of our product compared to casts, our product is actually listed by the FDA as a brace. So our costs are very similar to the other braces on the market.
All right. And now we're going to go on back online. Jeff Koenig asks, what would it take to grow 10 times faster?
We are actually looking for additional partnerships to help us grow and distribute our product that much more quickly. And that's what that final distribution and delivery arm was looking at. We have fantastic partners and manufacturing partners here domestically that are already working with major companies like Medtronic and have the capacity to produce. So now we're looking for those sales and distribution partners to help us disseminate the product.
Okay. From Ron Weissman, who on the team has built and exited a successful medical device company? And what are the revenue multiples or exit values for companies like yours? Two questions.
Exit multiples for a company like ours, usually 5 to 7 per the latest Silicon Valley Bank report. And our board member has a serial entrepreneur on it who specifically makes and builds medical device companies. So this is one of them. He's one of our original co-founders. He just exited his second company and is starting his third right now. And again, I used to work for another healthcare startup, and we just brought on a salesperson who did sales, healthcare sales, and this is her third startup.
Okay. Don Castle asked, tell me more about the strategy on how you're going to get traction and who is specifically your customer. I know you mentioned it in your deck, but can you reiterate that?
Sure. So our customer is an orthopedic surgeon that treats stable wrist fractures in private practice. That's our right now our beachhead market that we're targeting right now. We are gaining traction with them through these really unique, what we call pilot experiences, where we give the providers some samples of our product for a nominal fee, where they get an opportunity to get some nice hand-holding from us to try the product for the first time. And we give them some marketing material to share with their patients as well. And it becomes a cyclical feedback loop where we also play into their local community to be able to promote materials around the doctor using this really innovative, cool technical project. And we do this through a lot of digital media streams as well whenever we open a new clinic.
Okay. Pat Wang, then Damien, and then Tony.
Hi, good presentation. My question is about the fitting. Hands come in all different sizes, look like your glove. It's like a glove. Does that mean it has to come in different sizes that I have to carry? And what is the clearance between the glove and the hand, and how do you make that adjustment?
Great question. So our product is like socks. A few sizes fits most. And with the clearance, we actually have measuring tools available for the clinicians, just like they would for other braces as well. So we teach them how to measure the patient's hand and then pick the right size. As far as inventory is concerned, again, you would need a couple sizes, not unlike you would have different sizes of braces or fiberglass tape. However, our products are ambidextrous, so you don't need to house double of any of the prefabricated devices.
Okay. Damien, and then Tony.
Yeah, this sounds like a great product. I definitely think there's potential. My question is, if I heard you correctly, it sounded like this started as a university project. Is that correct?
Yes, and they do not own the IP.
That's my question. Whether you confirm that.
Yes,
Right.
Through the senior capstone, kind of like a safe harbor, they don't own any of our intellectual property, and we are not licensing it from the university.
Yeah. Just a quickie. How much money have the founders invested so far?
Unsure of the actual amount. We started this company again as we were in college, so we were worth like negative $250,000 in student debt, but we didn't take a salary for many years into this.
Okay, and a question before we get to Tony from one of the participants. How do you justify a $10 million valuation given where you are today?
We looked at a lot of the other comparables with other medical devices, and many of them actually raised much larger Series A's without even having revenue at all. So the fact that we have revenue, we are experiencing doubling quarter-over-quarter growth even through a pandemic. And given the value caps on our previous safes, this is how we have justified our 10 million pre.
All right, I'm going to go to Tony Caramango.
Caramagna, that's great, thanks. Ashley, looking at your market slide, these numbers, are they the current fiberglass cast numbers?
This is looking at fiberglass casting, plaster casting, and bracing.
Okay, so have you done any analysis in terms of how many people in the United States break their arms, break their wrists, any growth in the market? I mean, I know, of course, you know, it happens every year, but, you know, is there a general growth in the market over time? Have you done any of that type of analysis?
Yes, actually, the market's growing depending on who you talk to, 5 to 10% every year. And within certain populations, such as the elderly, it's growing 20% year over year. And this has to do a lot with looking at the nutritional values of a lot of the westernized world. You know, our bones are becoming a lot more brittle. People are aging a lot fast. I should say, the aging population is growing as well. And those are the most vulnerable populations for bone fractures.
All right, we're out of time. And JJ, if you want to set up for the next one, we can ask any participant listening, any of the investors, if you want to give a couple of quick comments to Ashley.
Thank you,
Yeah,
everyone.
please, if you have quick comments, Ashley, those would be comments, not questions to be answered. So please raise your hand and then you can provide comments. Actually, David, we still have about 5 minutes left because she was a little bit short. She finished the presentation quicker. So if you have any comments, please go ahead. We'll start with Catherine.
Catherine, you can start it off with a comment.
Ashley, I love this product. It's very innovative. What I don't love is how you present your story. In particular, if you talked about the company as a medical device company, I don't remember if you do, but that was the impression that I got. They are models in my mind, in the investor's mind, about how medical device companies progress. And that usually includes FDA clearance, includes patent filing. You are employing a very, very different go-to-market strategy. And it's confusing to your audience. So you need to make that very, very clear as to exactly what you are, who you are, and so that we can figure out where you are in terms of your stage of development.
Thank you.
Yeah, thanks, Catherine. Please also evaluate the company. The link has been pasted. Stephen, can you put it again in the chat so that we, if someone didn't get to it yet, they will do that. Anyone else? We still have time for feedback. Anyone else for straight feedback? Okay, going once, twice.
Anyone wants to break their arm and get a free trial, just contact Ashley directly at breakmyarm.com.
I would just like to compliment you on your presentation style. I think you did a really, really good job with the presentation. Your style and delivery is very smooth, very understandable, and I thought it was a wonderful job.
Coming from Ray,
Coming from Ray, it's Ashley, the one thing that I would recommend is that you focus more on your team and your advisors to get the traction within the emergency departments and in the orthopedic clinics. I think that is really critical because that's where it either makes it or breaks it.
I will definitely add that in future decks.
All right, Lisa, you raised your hand. Was that you want to volunteer to break your hand or is it to comment?
Yeah, no, that was a breaking volunteer thing. I do it regularly anyway, so.
Info at cast21.com. Love to help you out.
So you know, Lisa is a skydiver. That's why she's talking about that. So
you know, that may be an interesting thing. You should provide your cast directly to either the parachutists or on board these planes that take up these parachutists that go down, you know, and jump out of something at 12,000 feet high.
Yeah, we'll have to. We need to wait for the ankle version, though.
Oh, sorry.
That's fair.
Yeah.
Hopefully,
all
you're
right.
landing.
Well, thank you. Thank you very much. Great presentation.
Nice going, Ashley.
Thank you.
Yeah,
everybody.
nice going. Definitely. All right. Okay, so we have Taylor. Taylor, are you on? I should have brought you in. Is there anyone else that you want along with your presentation?
Yes, if you could bring in Colton Dillian as well.
Colton, okay, I'm bringing in Colton. Here we go.
Hey,
All right, so
Taylor,
you can...
nice to see you again.
Nice to see you as well. How are you?
Living the life.
All right, so just for the investors again, the link for Crypto Hedgehog will be in the chat, so you can evaluate. Taylor, whenever you're ready, you can share your screen. Colton, you can jump in anytime.
Perfect.
Colton, you there?
Can you hear me?
There you
Yep,
are.
we hear you.
Yep, perfect.
Okay.
But you need the screen share.
I'm working on it. There.
And we're getting there.
Okay. Okay, can everybody see the screen?
Yep. Crypto Hedgehog.
Okay, here we go. All right, hello everybody. I'm Taylor.
And I'm Colton.
And we're the founders of Hedgehog, a crypto aggregator and portfolio manager that allows you to trade anywhere, track anything, and learn everything about blockchain.
We've been working together for over 10 years, and a good chunk of that time was on the founding team at Acorns. We designed the marketing strategy for their first 2 million app downloads, and we helped set up the broker-dealer and the registered investment advisor in both the US and Australia.
Alan Stevo, the previous chief of staff at the world's 4th largest crypto exchange, Kraken, is advising us on our brokerage operations, and we have a killer team that's helped startups raise over 79 million across industries from gaming to transportation, including the recently IPO'd Hyliion.
And by the way, you can keep track of the judging rubric in the bottom left-hand corner. Want to dive into rubric point number 1, the problem we're solving?
Right. So nearly every crypto owner checks prices every day. 2/3 use 3 or more exchanges, and for over half of investors, crypto was their first investment. And right now, Excel is the primary way of managing those investments.
If you've ever thought about managing your investments in Excel, don't. This is what our spreadsheet used to look like.
Between manually entering and tracking all our information, setting our financial strategies, and executing trades, it would take us about 30 hours a month to correctly rebalance our portfolio. Simply put, this takes way too much time and is way too complicated for the first-time investor.
And that's why we started building Hedgehog. Manually entering balances in Excel and swapping funds between wallets used to be a huge pain. Our median user keeps track of at least 10 different wallets. But now you can track addresses from over 500 different wallets and automatically sync any balance from over 1,000 different chains.
So after a quick search here, I'm going to find Coinbase Pro, save it, and add it to my account. Now, I could add all of my data manually here, but honestly, I really don't want to. So I actually have the option to connect my Coinbase Pro account automatically to Hedgehog. After dropping in my API keys and testing my connection, all my addresses will automatically sync and instantly be added to my account. This connection allows us to track orders and process trades, and we also have films and guides to help users easily get connected. So now that we have up-to-date balances, we can start building a portfolio. If you want, you can group your assets into customizable stacks like banking or Ethereum tokens. And within each stack, you can set strategies that apply target weights to your assets based on market cap, active users, or transactions. But you can also assign allocations manually.
So imagine being back in 2004 and investing in Facebook, MySpace, and Friendster. And we don't know who's going to be the winner, but now we can invest based on their daily active user counts. With cryptocurrency, you don't have to wait for an IPO and a quarterly 10K report. You get that data every few minutes, so you can invest accordingly. So based on my portfolio settings, I can view recommendations about what to buy or sell. Here, I'm overexposed to Bitcoin. My recommendations will change automatically based on the latest market data and the performance of my portfolio. And so here I'm going to plan a few transactions, buy a bit of XRP, some USDC, and some Chainlink to balance my portfolio. And when you're ready to trade, we can also process orders for any market on any connected exchange. And honestly, this is the biggest time suck of all when managing a crypto portfolio, but Hedgehog makes it a breeze. Normally, I'd have to log into one of my exchanges, put in my 2-factor auth code, wait for the verification email because Binance still doesn't recognize the browser I've used to log in 100 times, and then I'd do it again on 2 more exchanges so I could jump between each site to compare prices before placing my final trade. And then I have to go to my spreadsheet and record the transactions, the cost bases, new balances.
And in the time it took you to describe all that, the trade is done.
Oh, really?
Yep, we rehearsed this well, man.
Yeah, well, as you can see, we've just completed a trade on Coinbase Pro through our site. We've simplified everything into one interface for all the 130 plus exchanges we connect to. But what about the price comparison stuff? I can place a trade, but how do I know if the price is any good?
You know, that's a really great question, Colton. I'm glad you asked. We're working with Hopscotch to offer best possible pricing for any trade. This allows us to buy crypto at a cheaper price than anybody else on the planet and offers the unique advantage of being built by my brother. Using their proprietary algorithms, we can often offer a 2% discount to the nearest exchange price. People choose where to shop based on whether or not a product is cheaper, faster, or higher quality, and we're offering all three.
Wow, so we help you manage your wallets, build your portfolio, and trade on any exchange?
But wait, there's more. We also have research for any coin, which we've aggregated from thousands of different sources. We have overviews, films, teams, partners, market data, and up-to-date news feeds. Why? With the New York Stock Exchange, you pretty much know what Boeing and Apple do. Crypto is different. Looking at a list of tokens, you might be completely lost.
We built this because we would often forget what certain coins did or why they were valuable. In the early days of 2017, there was a new shitcoin every week. So we developed a process to filter out potential winners from scams. And this is that process made visible.
Because our mission isn't just to make our users money. We also want to educate them because understanding what you're investing in is the first step to assembling a great portfolio. So Hedgehog is great because we're a full stack portfolio solution for both the retail user and the $100 million hedge fund. Competitors like Blockfolio, CoinTracker, and CoinMarketCap have fewer features, bigger teams, and multi-million-dollar raises. Blockfolio specifically was just acquired by FTX for $150 million, and CoinMarketCap was acquired by Binance for $400 million.
But let's take a step back and look at a snapshot of the industry. There are over 2,000 actively traded cryptocurrencies. They all do different things, and people are already spending millions of dollars to do those things on the blockchain.
One of the reasons we got into crypto was honestly because of smart contracts. Before Hedgehog, we were running a consulting business, and 3 of our customers broke their contracts at the same time. And anybody who's sold their time knows that your biggest problem is accounts receivable. Essentially, one of them declared bankruptcy, one was successfully sued by their ex-partner, and one was from Alabama and decided that because we were in California, they just didn't have to pay us. That's when my brother told us about Ethereum, and a light bulb just went off. Like, regardless of price, if we had been able to use an automatic escrow contract on Ethereum, it either would have saved us from making those deals in the first place, or it would have saved us 30 grand.
And the market has grown a lot since then. Today, it's quite sizable. Coinbase earns over $500 million in revenue annually. Binance over $1.2 billion. Even with fewer customers, companies like Celsius and Hodlbot are sustainable businesses with attractive margins and opportunity to scale. Even if the market never grows another dollar and we capture only a small portion of it, we can still be a very successful company. But we see the market growing aggressively well into the future. Not only has the annual exchange volume ballooned from 10 trillion to 46 trillion over the last year, but cryptocurrency capitalization can grow over 200 times larger before matching the size of public equity markets. Non-fungible tokens are already bringing real-world assets like stock and real estate onto the blockchain. Private cap tables are being tokenized and traded on decentralized exchanges. One day, the entire existing equity market will likely be tokenized and exchangeable on a blockchain. In short, you'll be able to trade company stock as cryptocurrency. The point is, in 1973, few people would have bet that 2020 derivatives would eclipse public equity value 8 times over, yet here we are. We believe cryptocurrency is on the exact same trajectory.
In terms of traction, everything is currently live on cryptohedgehog.io. We've spent almost nothing on advertising, 4,500 people have used the site, and nearly $1 million worth of assets are being managed, a 20% increase since our pitch last week. If you're interested, please sign up, register an account, and let us know if you have any questions, because we would love to get your feedback.
Oh, great. So we already have customers and anyone can sign up right now?
But wait, there's more. Let's talk about rubric point number 8, marketing, sales, and distribution. Honestly, understanding who our target market is pretty easy. If someone's in crypto, they're probably going to let you know within the first 5 minutes of your conversation. But to be succinct, they're primarily young, male, and tech savvy. So in addition to traditional social and search advertising, we've designed a go-to-market strategy to take advantage of these closely clustered demographics and target traders where they already hang out. trading subreddits, Discord groups, Telegram chats, Hacker News, Product Hunt, and other such tech trades. Right now, we can earn revenue based purely on a subscription fee for our trading product. We have limited regulatory risk here since users are connecting to their own accounts on other exchanges and Hedgehog is simply acting as a UI layer. We also want to register as an investment advisor and broker-dealer, which will lead to faster onboarding, a broader range of customers, and allow us to charge additional wrap fees and transaction fees for new products. That being said, neither registration is necessary for us to run a profitable business. They merely help us diversify our revenue streams and dramatically increase our margins.
And increase the competitive moat around our offering. This is our roadmap for future products and the legal structures that enable them. Each registered entity we build is another obstacle to replicating our business model and has a huge impact on both the top and bottom line. Plus, it makes everything easier for the customer. No more connecting all your own exchanges, no more assembling your own portfolio. We'll be able to do all of that for you. Taylor, there's a lot on this slide, but I still feel like we're missing something. What could we have possibly forgotten?
You know, I think you're right. Additional details are available in the appendix.
Yeah, so let's just focus on 3 of these. Today, we have already built a proprietary exchange multiplexer that powers our trading platform. We're currently transitioning our existing clients from the free open beta into paid trading subscriptions. Next, whether we hire a third-party broker like Interactive Brokers or build our own, having a broker-dealer allows us to custody customer assets, charge transaction fees, and take full advantage of Hopscotch's market-making system. From there, our options only proliferate. Just like Robinhood, we can take payment for order flow and offer customers free trades at the best possible price. By the way, payment for order flow comprises 40 to 50% of Robinhood's revenue, and they're currently valued at $11.2 billion. Our projected income here is based on a conservative outlook and assumes that we'll get our registrations in 2022. Each revenue stream from our brokerage, advisor, licensing, and tax products comes online sequentially at various dates in the future, and all assumptions are fully editable from user acquisition costs and churn rates to transaction behavior, deposits, and more. We're looking to raise $1.5 million in a priced round in order to fund our regulatory registrations with the SEC and FINRA, to increase our advertising budget, and to hire additional developers primarily focused on mobile and security. We've already raised $175,000 in a safe note with a $7.5 million cap and a 20% discount. And while we're open to taking on more money in the safe, we are currently looking for a lead for a price Series A.
Summarize, at Hedgehog, you can trade anywhere, track anything, and learn everything. We have best price transactions powered by Hopscotch, more features than our competitors, and everything is live today, serving real customers. We're only looking for a little extra rocket fuel to take us to the moon. And with that, I'll open it up for Q&A.
Quick timing. All right, we're going to go online first, though, Howard, and then Don, and then we'll go on to the chat questions. Howard, want to start it off? One question
Yeah.
at a time, please.
Yes, hello, can you hear me?
Yep.
Yes.
Great. Do you or anyone else working with you as a partner plan to offer and or make markets in options or other hedging and speculation derivative products in any of the currencies, or especially in like straddles or other type of cross-currency hedges?
So from our perspective, we don't need to build that product. There are a few exchanges that are already offering derivatives, but we can offer those markets through those exchanges for the time being. And once we have that broker-dealer license, we can absolutely create those own products for ourselves.
And really follow-up question, are you going to do your own mining to check the provenance of and clear title to things being offered and bought on, through you? Or is that risk all with the buyer? And the seller?
Ideally, we would have our own block networks, but there are plenty of services out there that currently offer that. So we don't need to build that ourselves right now. That would be much further down the line.
Not asking whether you're going to build it, whether you're going to offer it as a service.
I think that's
part of a
outside of our
stands behind things. Yeah.
I think that's probably outside of our main business line for the time being, but there's no reason we couldn't expand to that in the future.
All right, thanks.
All right, Don Castle.
Pardon me, I'm still not clear on the specificity of your revenue model. Exactly how do you charge, and for the user, what is the cost you showed some gross revenues, but I didn't see what it was on a per deal or per subscription basis, or just what. So can you just verbally tell me what that is?
Yeah, so the subscription is $30 per user per month is our go-to-market. And then we're also looking at doing about $1,500 a year for registered investment advisors if they want to license the product to manage their client funds.
And how many users under your assumptions do you need to be profitable?
So for us to be profitable today, we only need about 1,000 users, and we would be a profitable company. Ideally, we would like to expand and hire additional customer service reps, hire additional engineers. And for that to scale appropriately, we would need to get more customers, obviously.
Thank you.
A question from online from Catherine. How long has your platform been in production mode? And have you validated your CAC, LTV, churn, other metrics?
So we have been in production for a little over a year and a half. Our trading product has only been live for a few months, and we've been validating that. We have done some initial advertising, which does lead us to believe that our customer acquisition costs are realistic. And we have been approached by registered investment advisors to license the product. So we know that that is a desirable product, but we have not officially charged any customers yet.
You haven't charged anyone?
We haven't charged anyone yet.
Okay, so you don't have any churn figures, obviously, unless, right?
No, that's a swag based on our experience at Acorns.
Got it. How vulnerable, I think this is from Mike, how vulnerable is a user to being hacked and having their own crypto stolen? And are they also losing anonymity by using your platform?
Yeah, so yeah, I mean, that's sort of one of the advantages of using the API key aspect at the beginning here, is that we sort of double down on security with the additional security that all the exchanges and connected software applies to that. But we also have two-factor authentication and verification requirements in order to trade. And everything is encrypted with 256-bit encryption. Outside of that, my brother previously used to be actually a security expert. So we have that advantage going for us as well. But that is one of the primary aspects that we are raising funds for, is for security-specific employees.
Yeah, that was actually a question from Minda. I misspoke. It was not from Mike. Why is your website currently down?
That's a great question.
Yeah, that was from Marcus. So he apparently is trying to do double things.
Huh.
You don't have to go investigate it right now.
It's not down. You guys need to put the www before cryptohedgehog.io or it won't come up.
All right. Ray Weston, you want to ask a question? Ray?
Yes. I just had a quick question on this revenue slide, actually. You show that your revenues are going from 17,000 this year to 6.9 million next year. And I just wanted to ask, I mean, obviously financial projections are looser and harder the more years out. But I mean, the early years, you really ought to be able to dial them in. And so why should we as investors believe that you're really going to grow your revenue from a figure like 17,000 this year to a figure like 16.9 million next year?
To 6.9. So the answer to that is, one, this year we haven't taken any revenue yet. So we're planning to take revenue for the first time next month. The second answer to that question is that when you look at other businesses in the space, the growth has been explosive. We did some research on other exchanges, and it was something like 1/3 of all exchanges reached above 100 million in volume within their first year. The thing about crypto as a space is people are very excited to try new products, and especially to try very new things. And because the risk appetite is so high already, people are more willing to take chances on new products. So we believe that these numbers are realistic in that sense.
Mm-hmm. Right. Here's a couple of things that I'll put together. First of all, according to some of the comments, you're extremely entertaining, and we would like that Ginsu knife set. So that's one comment. The second thing, you have raised no money since 2018, and you put NA for a current raise. Why are you here? What is your funding plan?
So I believe that I mentioned that we still have an open safe note that was raised on these terms. We have $175,000 in the bank, and we are looking to add more money into that safe note. But we will also be pursuing an actual price round as we move into next year. And so that time limit is short.
Yeah, and I don't know if it additionally answers this, but like our team is relatively small, and we are also developers, and so we are splitting our time between developing and then actually going out and talking to people and raising funds. So,
all right. Now another question. This is from Howard again. Do you or anyone else you're working with or plan to partner with plan to offer any market in options or other derivatives so we can have fun playing futures, derivatives, options, straddles, strangles, and stuff like that?
They already answered that one.
All right. So apparently we'll go on to the next question.
There's one from Gerard and also from Ron, I think. Yeah.
All right, we'll go to Ron. How much do I need to invest to get the steak knives? Very funny. Good one, Ron. Sorry about that, LOL. Let's see. What IP strategies are you currently planning to execute? Where is your IP?
So this is our IP slide. Basically, we do have some proprietary stuff around how we aggregate data and how we aggregate all of the exchanges, how we move funds between exchanges in order to match volume and the likelihood that coins move together based on their beta. So there's a bunch of secret sauce in there that is protectable. Even if only by trade secret, that is a huge protection in crypto. But then we also have this whole regulatory strategy where each regulatory entity is another obstacle for somebody copying our business model. So we built everything so far to offer a product and get paid without those regulatory entities, but taking that extra step to get those will make our product easier to serve to customers, more broadly likable, and then also harder to replicate.
yeah, and the way that we've designed the system as well, like if someone comes out with something new and fancy that everybody is climbing on top of, like yield farming or loaning or something like that, our system can actually just connect to those products and offer it through Hedgehog. So it's not as much of a limitation in that respect.
Yeah, so Gerard, do you want to ask the multiple part question or should I read it?
I'll go ahead, David. So I'm curious about your strategy, which you haven't discussed, but what your thinking is about pairing up with a major broker dealer. Have you built an interface or do you have an idea about how you could build a window so that they could attach you, pay you fees, which would be a huge cash flow stream? Mm-hmm. Are there issues regulatory or is it just practical? And if you had to pick one, who would you target?
So the main one right now is regulatory. Because we are not a broker dealer yet, it's much more difficult to take.
I get that. Yeah, I understand.
But that being said, we have built our system to be very flexible and we've built it so that you can basically create a shim, store it in our database. And then when you want to interact with Binance or when you want to interact with Huobi or Kraken, any of these exchanges, they can give you a broker code and then you just transmit all of the trades with that broker code. And so we've already built that for Binance. We've just been invited this week to build that for Huobi. And all of those things are interchangeable. We are in talks with Tasty Trades as a provider to be that broker dealer, but we're always open to being introduced to more.
Okay.
Yeah, I think time is up, David. We should open it up for comments and comments only. So Colton and Taylor, no response. If anyone has a comment, Howard, is that a comment or a question you have?
Sort of both. The comment is we have a potentially new administration coming in Washington. What do you think is going to happen? And what will you do more? This is a rhetorical question. What will you do if they decide to crack down on crypto? What's plan B?
Yeah, think about that. Ray?
I was just going to refer back to your intellectual property comments and say that, when you look at it from a strategic perspective, obviously investors are typically focused on patents because that seems like, the only sort of real hard, intellectual property. But what you have to ask yourself is the extent to which people can reverse engineer what it is that you're using. And if they can, then patents are very useful because you disclose your invention, but you get protection for a period of time. But if it's something that people can't figure out on their own or from looking at your products and so forth, a lot of times patent's a bad idea precisely because it does require you to disclose it to everybody and publish it. So actually, a lot of times trade secret is a much better way to protect things like that. So I would encourage you to really kind of do that from a strategic level and look at, do you really want to be applying for patents for this stuff, or is trade secret really the best way to protect it because of the fact that it's your algorithms and so forth that you're using internally.
All right, thanks, Ray, very much. Catherine, I'm sorry, I'm going to put you on the spot. I think you should make a comment.
Are you talking to me, JJ?
Yes, yes.
All right, so I have responding to your presentation style, I had two thoughts. One is that they are really fit for the market in which they are trying to participate in, because as most of us know, cryptocurrency really relies on sales and marketing. On the other hand, pitching to more traditional investors, the very, I would say, slick style of pitching makes it harken back to used car salespeople and TV ads, and that does not really increase your credibility. So my question to you is actually, at the end of the day, why don't you just use your own platform and float your own currency and then be done with it? Anyway, my 2 cents.
All right. Thank you very much, Catherine. All right, so the presentation is done. We are about halfway through, so we're going to take a 5-minute break, and we'll be back. So it's 1:24 or 24 minutes after the hour. We'll be back at exactly 1:30, so about 6 minutes.
All right, thank you very much.
Thank
Take
you.
care, thanks.
Hey, Don.
Turn off your
Hey, Jeff, I haven't seen you, Mr. Koenig. I haven't seen you in a while. How you doing?
Well, yourself?
Doing great, thank you.
My audio is doing funny things, but I'm well. Yourself?
Yeah, doing good. I can hear you.
Okay.
Okay. So just to give an idea to everybody, the last two companies, so AG Tools won its own category, but Cast21 and Crypto Hedgehog were wild cards. So both of them. So no more wild cards, but just want to let you know those are the two wild cards that we brought in.
JJ, how were the wild cards selected?
The highest scores after the winners. So
Oh, I thought you were going to say entertainment value.
I'm sorry, I didn't hear that part. Sorry.
I thought you were going to say entertainment value.
Okay. Okay. All right. So we'll give it another minute, and then we'll get started. Just want to let everybody know I don't know if Shaheen is online. Shaheen, are you online? Shaheen is here. Yeah. Not sure if he's can hear us or not, but there are a bunch of investors and judges are interested in investing in some of the companies. So we will reach out to some of you, see if you're interested. We're going to open up an SPV for each of the companies that would be potentially possible. So if you are interested in any, we'll reach out to you. Again, no obligations whatsoever. It's just another method that might be easier to invest into the companies and using one entity. So we'll reach out as soon as maybe late next week. And Shaheen and I will be reaching out to that because Shaheen has already the SPVs in place. If you don't know Shaheen, he is part of the Tecos Angels San Diego chapter. All right, so we will get started with the next company, and that is Express Cells. All right, Matt, here we go. So Matt, whenever you're ready, you can just unmute and get started. Share your screen as well, of course.
Whenever you want to start.
It would help if I was unmuted, it sounds like.
Now you're good.
Probably would help, yeah. Otherwise, you'd be using hand signals.
Well, thank you, everyone. Thanks for having us today. We're Express Cells. We are a life sciences company, and that usually means you expect that you're going to hear a story of about 7 to 10 years of scientific research, clinical studies, and a prayer that the FDA doesn't reject us at the last moment. That's not who we are. We create research tools. Specifically, we're a genetic engineering company that creates cell lines for research purposes. That means that we don't fall under FDA remit, and that means that we're currently revenue generating, something you don't usually hear for a biotech company that's only 2 years old. We create cell lines so other researchers can do a better job, faster, more efficient, and get better results sooner. We're currently raising $3 million to allow us to accelerate growth and expand our operations. What do we mean when we say a cell line? These are cells that are grown outside of the organism in a laboratory. They're vital for drug discovery. They're vital for other types of research because before you can do research in an animal or a human being, you need to do research in cell lines. They're a huge market, over $2.5 billion and growing rapidly. And we're in the highest end portion of this marketplace, the genetically edited cell lines, because it's 2020 and you can shape the cell line to make sure you have the perfect experiment. Now, you've probably heard about a lot of different types of knock-ins or knockouts. We are focused on knock-in cell lines, the ones where you're trying to insert genes into the cell itself. And that's still a dissatisfied market. Why? For one thing, as you can see, it could take up to 6 months to get your cell line made by one of our competing technologies. If you've invested in a small company, that's just not acceptable. No one wants to wait that long. We have a better way. Our technology is actually fairly simple in concept, more complicated in application. We use what's called homology donor repair, HDR, and that's why we've called it the fast HDR plasmid system. What we do is we use CRISPR like many other companies, but instead of trying to disable a gene or cut it out, we're just creating a lesion, an injury, and that activates the cell's own healing process. And that's where we trick the cell into taking our genetic material and putting it in the location that we want. If you look on the right, you can see our patent pending plasmid system. And if it looks like we've put together different parts of modular DNA, that's exactly what we do. We put the payload on one side, we put an antibiotic resistance gene on the other. And then when we actually want to insert the genetic material, we use electroporation. It shocks the cell, it opens it up. We introduce our plasmid. It gets fit into where the cut took place. And then a few days later, we flood the sample with the antibiotic. Any cell that's been transfected that has the new DNA lives. Any cell that doesn't dies. And if you're looking for a simple cell pool, we can deliver it in as few as 30 days. That's one reason why we call ourselves Express Cells. We can deliver it faster to our customers, the researchers who are racing to develop new drugs. But it's more than that. We can do multiple knock-ins into the same cell line. These pictures that you're seeing are living cells where we've knocked in 3 genes, one that codes, each one codes for a different colored protein, red, green, or blue, and each one is tagged a specific part of the cell. But this isn't a picture, it's a movie. And it's an experiment that our founder did. On the left, these are happy control cells living in normal media. On the right, they're in staurosporin. It's a compound that's toxic to cells. If you see on the right over this 13-hour video, they're dying in real time. So if you thought staurosporin was going to be your next best kidney or lung medication, sorry, it didn't work. But you didn't have to spend months doing the research. You didn't have to work with cell lines that didn't give you the answer. 13 hours, you have the answer, you can move forward. What does this mean? Faster results, better results, the ability to do multiple knock-ins in a very precise location. Again, better experiments, saving time and saving money for our customers. And we do it better than anyone else. We do have competitors out there. They're on the left. They're a mix of smaller companies that focus on genetic engineering and larger companies like Millipore, Thermo Fisher that are big distributors. But in all cases, they face the same issue. They can't do it as quickly as we can, and they can't do the level of multiple knock-ins that we're promising. We do have a better way. So that's the technology, but you're investors and you care about the business model. I'm going to spend more time on the left in the next few slides. These are the inputs that drive the business. But look on the right, because this is why we're doing it. For a custom cell line, one where a customer makes a specific request, we can do a custom project for $15,000 to $50,000, not an insignificant amount of money. We also have catalog items. We currently have 10 items in our catalog. They're less expensive. They start at $3,000. Perfect for a customer who doesn't want to wait, or a customer that has a smaller budget. Either way, you're looking at 80% margins, and depending on the product mix, we're looking at a revenue target by 2025 of up to $30 million. So how do we get there? One, with our technology, and you can see that we have an allowable claim in the US. We're expecting to get a patent in the next several months. We've also filed in all major markets where biologic research takes place. We are going where the small companies and big pharma are, because that's where we want to get our business. We have broad rights to our technology. It's out of Temple University here in Philadelphia. We have a global exclusive license to the Plasmid technology. We also use CRISPR out of the Broad Institute, but we are CRISPR agnostic. If we can find a cheaper version or a better version, we can switch to that. In terms of how we sell, because again, this isn't a developmental company, this is a commercially active company, we have three major channels right now. One is online, and that was always our plan long before COVID restrict the ability for face-to-face sales. We always planned to have an extensive online presence, which we've done. Whether it's our website, paid search, or email blast, we are driving business. We're getting approximately 15 customer requests per month just from our online activities. In terms of sales, we have three manufacturers representatives. They represent us and several other companies that work within the lab. And it's a great symbiosis, because we're often finding that the customer they reach out for, say, reagents or for cell culture, is someone that we can target for our own sales. And third, we're looking at conferences as well. That's been restricted this year, but there are several online conferences where we've been able to do tech talks or roundtables that allow us to target the research scientists who are the core of our customer base. Now, where are those research scientists based? Number one, small pharma and biotech, the types of companies that many of you have invested in. And they are ones where they often have money because they've had a good Series A or Series B round, but they don't have time, and they often don't have enough people. We're perfect for doing the work for which they don't have bandwidth. Similarly, for big pharma and CROs, big companies, takes longer to sell into them. But if you're selling into one of those companies, you get a lot of repeat business. And lastly, for academia and government, that's why we've developed our catalog items. They don't always have the money, but we've adapted our products to make sure that we can work with them. Now, who's doing this? Our team is broad-based and deeply experienced. I come from Merck and Shire. I have extensive commercial experience. I also have spent a lot of time in product development, so we know what our customers are looking for. Oscar's our inventor. This is actually our second venture together. Our first one was one of those therapeutics companies that ran into the data issues that kill most of them. He's an experienced entrepreneur and inventor. Shamim Nagdi runs our labs. She is an excellent genetic engineer. And Rob and Connie are on a part-time basis. They work with many companies like ours. I always like to point out that Rob's a former CEO. So we're trying to hire people who can do more than just what their titles say. The three companies on the right are manufacturers reps. They cover all of the United States. And we're actually in negotiations now with companies in Europe and Japan to represent us there as well. The result, we've been revenue positive. For, again, a biotech company. It's always a little odd to say that this early. We had our first revenues in July, and we've been showing month-to-month growth. We have a catalog with 10 products, including 2 products that are designed to support COVID-19 research. One advantage of being a company that can work quickly, when we saw the market opportunity, we did take advantage of it and created several cell lines that would meet the current demand. A result, as of this morning, our pipeline has over 10 proposals. That's a $400,000 contract value. And we're averaging now about 5 customer requests per week. So we're seeing some good throughput through the pipeline. What does this mean in terms of revenues? We're looking at, as I said, a target of $30 million in 2025, comes from 4 key areas. One is our current core business of immortalized cell lines, the ones where we can knock in tags, as you've been seeing in this presentation, that allow for fluorescence or bioluminescence. Also overexpression models where we can have a cell express a protein that doesn't normally exist in there. We are starting to grow our international business. We actually got our first international order this morning, which was great news. We expect that to grow over time with representation. And third, we're really looking at stem cells as a good area to go into next. That'll be part of the raise for our Series B. And that's important because stem cells are harder to do knock-ins, which means that we can charge more, maybe double what we're charging right now for a custom cell line. Finally, we're looking at partnerships as well, CROs or other companies where we can do protein production or other areas where we can leverage our cell lines. How did we get here? Well, we're still a young company. We were founded in 2018. We got our license really only 18 months ago, and we closed our Series A about 14 months ago. You can see who our investors are. And if you see my picture there, it's not because I think it's a good picture. It's because I'm an investor too, and it's at the same terms as everyone else. So what are we doing now? We're doing a raise in two parts. We're doing a Series A2 right now, and we're doing it at a favorable valuation because frankly, we need to grow. We need to expand our operations to keep up with demand. Our Series B next year at a higher valuation is all about growth. You can see more commercial spending as well as R&D to develop those stem cell lines. So our current term is a participating preferred equity round. Our Series A was a priced round. This one is on a pari passu basis. We're about half committed right now, and we'd really like to get as many commitments in by the end of the month as possible. Pre-money value, 3.2 million, which is equal to the post money from our original Series A. Our timeline, our goal is to complete all of the fundraising by mid-2021, expand our promotion and launch of stem cell lines in 2022 with a 2025 exit. And my last slide, we've done some work, and this is work I used to do at Shire. We think that we can look at several comparables and get some good return, up to 14 times investment. So we're Express Cells, a biotechnology company that's generating revenue, and I'd love to take your questions.
Perfect timing. We're going to go on the participant panel. We're going to go Tony, Minda, Catherine, and then Howard.
Yes, great presentation. Thank you. Is this technology? I'm trying to rephrase this. What you're trying to do is this considered like a DNA replication, like a DNA band-aid for cells?
It's a good question. Not exactly. What we're basically doing is trying to insert genes that don't exist within a cell. So if you look at this picture down here on this page, if you looked at cells normally, they're black and white. You really can't tell anything apart. In this case, we've inserted 3 genes. Each one codes for a fluorescent protein, and they're tagged to another protein within the cell so you can see quite clearly. For example, the green is tagged to a protein in the cytoskeleton. So I wouldn't call it so much a band-aid. Think of it more as an enhancement.
Okay.
If you don't mind, real quick, would this work for a genetic disease? Like,
in theory, it might. The complicated part becomes for a genetic disease, you now have to deliver the gene. You have to do one of 2 things. You need to deliver the gene into an organism and have the plasmid actually reach the right cells, or you need to create a cell line and then have that injected into the organism and have that reach the right areas. That's not something we're looking at, but that could be an opportunity for an exit for us. As I said, we don't want to play right now in FDA regulated areas or EMA regulated areas. But if a pharma company wanted to license this technology to do a therapeutic, we'd be more than happy to discuss that. That would not be included in the $30 million target I outlined.
All right, thank you.
You're welcome.
We're going to go to Minda, and then Catherine, and then Howard.
I'd like to know a little bit more about your customer base and how often they would repeat using you. Once you acquire a customer, how often do they come back?
That's a good question. Concerning our first paying customers started with us in July, it's a little early to say how many will come back. I can tell you that we have 2 customers right now that are, I'm going to phrase it this way, trying us out. One asked us to do 1 cell line. One is actually wavering between us doing 3 or 4 cell lines with the intention of seeing how it goes, how quickly we deliver, how productive they are. And if that's the case, then there would be an opportunity to have an ongoing relationship.
Thank you. I'll put extra questions in the chat.
Thank you.
Howard? I'm sorry, Catherine, then Howard.
Thank you. So this actually is in line with my question. First of all, I just want to say very fluent and fluid presentation. You answered 2 of my top questions already in your pitch. That's really good.
Thank you.
So I have a question about your sales cycle. What is a typical sales cycle? How does it work? You mentioned trials. So, and how long did it take you to build your 400K pipeline?
In order, the fastest that we've sold a cell line is 2 weeks. Most of them, I would say it takes more about 2 to 3 months to get approval. And that's even in smaller companies. You know, I said $15,000 to $50,000. I always liken it to buying a car. And anyone who's been in a company, you don't just go and buy a car on the company credit card without someone signing off. So generally, I'd say it takes 2 to 3 months. In terms of, and I'm sorry, your second question?
What's the qualification process? And how long did it take you to build your 400K pipeline?
That takes several months as well. It's a living pipeline, as I would call it. I'd say for about the last month and a half, it's been at about this 400,000 level. And that's because we have new projects entering and new projects exiting, either exiting because we won the contract or exiting less often because they have decided to go with someone else, and more often the nature of the project has changed. So it took probably about 4 to 5 months of selling and marketing to get to this level and then to maintain it.
Thank you.
Okay. Howard, and then I'll go online.
Yeah, I have 2 questions, if you don't mind. One is how much cash you have in the bank and what's your burn rate? That's all one question right now. And the second question is there some sort of a know your customer principle similar to what they have in banking with respect to sending these types of genetically modified cells out to different people? Like, how do you know that there's not some terrorist out there using this to evolve some sort of nasty bug that they're going to, introduce into the water supply of New York City or whatnot?
I will start with the first one. With the current financial commitments, we've got about 300,000 in the bank. Our burn rate has stepped up to about 50,000, and that's because, as I said, we've had to grow our operations. We're trying to keep up with demand. But bear in mind that burn rate and the cash on hand doesn't include the revenue that'll be flowing in. So if you look just at what we've signed recently, we have a significant amount of receivables. So we're starting to move away from a pure burn rate argument to a run rate argument. In terms of safety, there are several things. First of all, the cell lines that we're working with, you can't really just put them back in a human being. We're working with HeLa cells. We're working with HEC293T. So it's not just like you can do something, bad with them. The second is we're controlling what the actual genetic change is. So I'll give you a good example. For our COVID-19 projects, we've knocked in single proteins that appear in the SARS-CoV-2 virus. You can say, oh my God, are you going to make it infectious? Well, if you knock the N protein into a HEC293 T cell, it'll express that protein, but the cell itself can't become infectious. So in fact, rather than being a risk, it actually benefits the scientists because they don't have to work in a biosafety 4 level environment where they have to run the risk of working with live virus. They're now working with a human cell line that expresses one protein that's effectively harmless. I should add one other thing. When your customers are companies, like a university or a top 50 pharma company, we have a pretty good grasp of where our cells are going.
All right, let me ask a few questions. You previously raised $1.2 million and now you're raising on a post of 3.2 mil. Can you explain your financing and how the numbers jive?
Sure. So we raised 1.2 million on a pre-money of 2 million. The original goal was 1 million and we were 20% oversubscribed. Our goal is still to raise a Series B next year. We've held off on that for a variety of reasons, one of which is the economic uncertainty. And I'll be upfront. We launched our commercial operations the second week of March, which in retrospect, given what's happened with COVID, was about the worst possible time. So we didn't get much traction for the first 2 to 3 months. And then as people adapted, we adapted. So we're raising the 500,000 now, and it really goes into 2 areas. Paying for additional scientists and lab space and giving us some working capital while we are able to produce the revenue generating production. And that's where the 3.2 million comes from. It's based on our post-money valuation after the Series A.
All right, let me go to a few other questions. Is what you're doing enhancing gene splicing technology? And do you have any studies on host rejections?
Well, it's gene splicing at a cellular level, not at an organism level. So when you're talking about rejections, it depends how you define it. We generally don't face rejection the way that if you're putting gene therapy into a human being, it may not work or may only work temporarily. This is really being done at the cellular level. So it's less of a rejection than if it doesn't work in the first place. And not every gene can be inserted. We are still working with biology, but we'll generally know within a week or 2 of the procedure, long before we send anything to a customer.
All right, in terms of applications, are there applications in ophthalmology, eye impairment, eye defects, glaucoma, retinitis pigmentosa, anything like that?
The answer is we don't know. And that's because our focus up to now has been very much on research tools. So, but I could say, can we do genetic engineering, knock genes into an eye cell, a cell out of the eye? Yes, we can, but we wouldn't be doing it in the eye itself. We'd be doing it in a laboratory culture.
Okay, so in a follow-up to that, in a sense, have you actually made any sales to big pharma in either any specific area or in general?
We're closing in on our first sale with big pharma. We have a verbal agreement. Most of our sales up to this point have been to academics or to small biotechs.
All right, Pat Wang. This might be the last question, depending on how long the question is and the answer.
I'll be quick. My question is about the cell line development. How long does it to develop, and how do you develop? I mean, how do you control your consistency and your delivery? And then also, who's your competition? Thank you.
Okay. Cell line development can go anywhere from 30 days to 6 months. It depends on the number of knock-ins you're doing. It depends on the genes you want to insert. And it also depends on the type of cell line you're working with. So if you're doing a simple knock-in into a HeLa cell, we can turn some of those with delivering a cell pool. We can do that in 30 days. If you want to do 3 knock-ins into a slow-growing prostate cancer cell, that's a 6-month project. In terms of quality control, that's one reason why we have our own lab. We have an extensive number of QC checks, including Sanger sequencing. If we're doing an overexpression model, we'll do Western blotting. We do PCR as well. So we check before we send anything to a customer. Third, our competitors fall into 2 groups. Smaller companies that are genetically focused, such as Synthico or Horizon Discovery or Genoway. And then a couple of the larger distributors. Millipore Sigma has their cell design studio, and Thermo Fisher can provide cells as well.
Thank you.
Okay. Probably this is the last question, and it comes from Minda. And is this company, what's your real core competency? Is your competency on being excellent at selling and manufacturing, or R&D? And a second component, not really correlated, but what % ownership does the founding team have after the Series A2 round is complete?
In terms of core competency, I'd say there are 3. Number one, that we have a better technology to which we have exclusive license. Two, that we have a variety of cell types that we can knock this in and do it with a great deal of precision, more than you see with a lentiviral knock-in approach. And number three, the other benefit, you're gonna laugh a little bit, customer service. We have found that there's very poor customer service in this marketplace. So just by, for example, saying that we're going to provide an update to customers every 2 weeks, you would think that would be basic on a 3-month project. People are thanking us as they've never heard of this before.
All right, and final question, what percentage of ownership does the founding team have after this round?
About 40%.
Total.
Total, that includes common shares that were issued when we founded and the preferred shares that I have because of my investment.
Yeah, and I just have a strange question. Your logo, your color looks like my logo for my browser.
I think
I'm just
the color's
curious.
coming out a little faded there, sorry.
Does Google own you?
No, we're not owned by Google, but if they want to buy us, we'd be more than happy to be bought out by Google.
Good answer. Anyway, thank you for your time. Appreciate it.
Thank you.
They have a little bit of money left at Google, right, to buy you out. All right.
Yeah.
So while we're transitioning to the last presenter for the day, if there's anyone that would like to comment, so Matt, it's only a comment, so no need for a response.
Okay.
Please raise your hand and we'll let you go ahead and comment on Matt's presentation.
I see. Tony, you want to comment?
Yeah, Matt, you've got a great concept. I think you should definitely dive deeper into the daily, DNA band-aid that would, potentially go after some of the genetic diseases, such as cystic fibrosis, for example. I think you could really help, the grassroots biotechnology work that's happening for these diseases.
Okay, thank you.
Yeah, Don, go for it.
You took a very technical subject and made it very, very understandable for the non-scientific people like myself. That was very well done.
Thank you.
Catherine?
I want to second what Don just said. Just want to second that. Also remark that the small amount of ownership remaining for the team actually would worry investors. So it would be useful for us to also hear whether you have plans to expand your pool, for example, either pre or post money, so that we can believe that the founding team actually will continue to be at it. Thank
There's
you.
enough incentive. Yeah, exactly. Howard,
Right.
last comment.
Okay.
Yeah. That was such an interesting comment. I forgot my own comment. All right. Yeah. I don't understand one comment that you guys made, which is that you get the same margins on the off-the-shelf standard kind of cell lines as you do in a completely custom development project. I think the custom development project ought to have like direct expenses for R&D and stuff that are, amortized over many multiple sales of an off-the-shelf product. So the margins ought to be higher in the off-the-shelf product. You don't have to answer that. That's just a comment.
So thanks, Howard. Matt, that's a good comment to clarify for the next time around.
Okay.
All right. Thanks very much, Matt. Have a great,
Thank you,
great
everyone.
presentation. Thank you. All right, Patrick, you're in. You can share your screen. Is there anyone else you want to be, or you're presenting by yourself, Matt?
Yeah, I'm solo.
You're solo. All right, Matt. Whenever you're ready, you can take it.
Okay. I'm Patrick Henry.
Patrick, sorry. I meant Patrick. Go ahead.
So you guys can hear me okay?
We can hear you, we can see you, and we can see the screen as well.
Terrific. All right. So I'm Patrick Henry, the CEO of Grow Guru. We're all about strategic irrigation management. A little bit about my background. This is my fourth startup product company as a CEO. Worked for some larger companies in Silicon Valley prior to that. I've had multiple exits, including an IPO that led to a $1 billion valuation, and eventually we sold that company as well. I got involved with Grow Guru in early 2017, initially as an investor, and then joined full-time in the middle of 2018 as the rest of the founding team really got the rocket science part of the project underway. So what we really do is we help farmers make more money by increasing crop yield and more efficiently using water and other scarce resources in a more sustainable way. So the overall agriculture market is massive, $2.4 trillion annually, and it's going to continue to grow, mainly because there's an underlying crisis brewing where we have too many people, and it's going to get worse, not enough fresh water, and we have to significantly increase our global food supply to feed all these people. On top of that, there's a reducing amount of arable land where we can grow crops because cities are taking over a significant amount of that space. On top of that, farming is really hard. Farmers are faced with a number of technical challenges, and any solution you bring to the table really needs to address a very painful problem and deliver a relatively short payback period, which the Grow Guru solution does do that. And if you look at it, optimal irrigation has the single biggest impact on crop yield and crop quality. And it's really all about monitoring the root zone of the crops. There's other things you can do with spatial data, but that can give you a lot of false positives and false negatives. So having the ability to what they call ground truth through underground soil sensors becomes very important in this market. So how do farmers make irrigation decisions today? Well, most of them are using what we would call suboptimal methods. Looking across the road, we'll see what their neighbors are doing, going out and physically feeling the soil, looking what they did last year, and then using kind of more expensive sampling techniques that aren't real time that you have to send out to the lab. Only about 10% of farmers are currently using soil moisture sensors, and they are getting good results. A 10 to 20% increase in crop yield and a 10 to 20% savings in input costs. But in the biggest part of the market, which is annual field crops like corn and soybeans, the soil sensors have to be annually installed and removed because you can't have anything in the field during seeding or harvest. And that also forces you into a very narrow window of install and removal, about a 4-week window around seeding and about a 4-week window around harvest, which is very expensive, cumbersome. It's when labor is most scarce. So a lot of challenges associated with that. The Grow Guru solution solves all those problems by providing a permanent install in annual field crops. So how do we do it? So if you look kind of from left to right here, we bury the soil sensor below the till depth in a no-till or strip-till operation that's typically 9 to 12 inches deep. And we've developed this proprietary, now patented, we got the patent issued in December of last year. We call it the wireless underground system, or WUGS, which can communicate through multiple feet of rock, soil, concrete. In the agriculture application, it's primarily about dealing with soils that are very dry, very wet, very sandy based, very clay based. So all types of soils we can communicate through. So that allows us to bury the soil sensor and the farmers can just farm over the top. That communicates to an above ground bridge, wireless communication bridge, that then communicates to a base station, and that brings the data into the cloud, where we apply machine learning and add other information to give farmers recommendations about when and how much to irrigate. And we do that on a very simple, intuitive, farmer-friendly user interface that they can access on their mobile device, tablet, or computer. And then the next generation of the product, we're developing a two-way version of the WUGS that will allow the above ground telemetry to go mobile and be mounted on a center pivot irrigation system or on a drone longer term. Also, from a software standpoint, what we're finding as we're getting into this market in a bigger way is that our software is really best in class, and we're doing a lot of things that farmers want to do based on the feedback and information we've gathered, both from a agronomic standpoint as well as from machine learning and user interface standpoint. So we currently have what we call the good version of the software in the market. The better will be deployed in the spring of next year, and the best solution in the fall of next year. So we actually have an opportunity to sell software without selling any hardware in the existing install base. So if you look at the competitive landscape, a number of the deployments today are with kind of hardware only companies that provide a rudimentary software set, and we're partnering with them to deploy our software on their hardware in addition to deploying the WUG solution. This expands the market for us and also gives us, you know, a pure SaaS solution in addition to the hardware enabled SaaS. We call that GrowGuru Insights. So we have a superior value proposition versus competition. We reduce the total cost of ownership because you don't have to annually install and remove. That massively improves scalability because instead of a 4-week window, you have a 6-month window to do installation, and you only have to do it once every 5 years. You get the, you know, increase in yield and savings and input cost that you get with the annual install and removal, but it actually gets better over time because you can more effectively manage year-to-year variations, pre-season irrigation, and the machine learning gives you additional information. Since you have the soil sensors in undisturbed soil for long periods of time, you have what they call the machine learning world, clean data, and that's something that nobody else is able to provide at this time. So our go-to-market, we started in California, really in specialty crops with our first generation product that we call the STEM. That does cable from the sensors in the ground, but it does use our proprietary and patented sensors. Then we moved to our phase 1 deployment in spring of 2019, where we got our initial deployments in field crops, corn, soybeans, cotton, wheat, sorghum, and alfalfa. And then this spring, we moved into the kind of broader Midwest, the Western Corn Belt, where there's additional opportunities with farmers that are doing annual field crops. They're fully irrigated, and in most cases, they're what they call deficit irrigators. So they use a significant amount of their water budget before they put crop in the ground, sometimes up to 20 to 25%. So with the permanent install, they're able to manage that pre-irrigation much more effectively than they can when you have the annual install and removal products. In spring 2019, we also started our trials in what they call dryland farming, where they don't do irrigation. This is rain fed. So you say, well, if you can't control the weather, why would you deploy soil sensors? The reason for this is a significant amount of the dryland farming market uses what are called tile drains, pattern tile drains. These are like French drains that are in the field. And a lot of times too much water is a bigger issue than not enough water. So if you can effectively valve and gate those drains and drain the field appropriately, you can substantially increase crop yield. That part of the market is about 6 times larger than the rain-fed market, and we've now got our first kind of big strategic partner that we're going to be deploying with in that market in spring of next year, and pretty much throughout next summer. Then longer term, there's a bigger opportunity in the international markets as well. We plan to get into those selectively. Some of our patent strategy has really been around, other than US patents, kind of checkerboarding a little bit in some of those international geographies as well, with the WUGS patent, as well as some of the other things that we're doing. So our current deployments, as you can see, predominantly in the Midwest, the Mid-South, some trial deployments in the rain-fed market, and then California, where we continue to make and sell our product out there into permanent crops. Market's massive, potentially $2 billion annually in the US market. There's 52 million acres of irrigated crops. 44 million of that is field crops, the corn soybean market, where we have a distinct competitive advantage. And we also, with the wireless underground system in the non-irrigated part of the market, have something where we can do what we call water table management in conjunction with valved tile drains. So big opportunity there. If you look at our competitive landscape, our biggest advantage today is really in the wireless underground system and the permanent install, which delivers the scalability. Longer term, what we see is having the proprietary data stream as well as what we're doing on the software side with that good, better, best solution that at this point, nobody else has been able to duplicate. One other thing on here, Centec is actually a hardware only company. They do have a telemetry product and a rudimentary software product, but they're one of the partners we're working with our software only solution, the Grow Guru Insights. And they've got an install base in the US of probably 30 to 40,000 units. So that's something we can pick up with our dealer network. We have multiple modes of a competitive advantage. The product side really around the wireless underground system, which enables the permanent install, the machine learning, which gives us more and more information over time, and then the flexibility to sell software alone, our software with our hardware, kind of get a beachhead with existing hardware as we convert those customers to the wireless underground system. The roadmap around mobile WUGs, adding the weather forecast and irrigation data. So that's kind of the precursor for irrigation automation. We've got our intellectual property, 8 patents issued and pending. 4 of those are issued, including the fundamental patent in the wireless underground system. And then we are able to support other inputs over time. If somebody were to develop a micronutrient sensor for nitrates, phosphate, potassium. Yeah.
30 seconds.
Okay. Then we would be able to go through that. Business model, again, we currently sell the hardware and have an annual subscription, moving to a software only solution through our channel partners. The team, we have the right domain expertise, technical expertise, and business expertise to win in this market. Some terrific advisors, including a farmer advisory board that has 3 key customers, in addition to big strategic guys. About $1 million in revenue today, ramping to about 5 to 6 million next year, and we have a pipeline to support that. Dealer footprint of 6 million dealers, and we'll go ahead and wrap it up. So we're looking to do a Series A middle of next year, $7 to $10 million. We did a $2 million kind of cap off on our seed round this year, and using that to expand product development, sales channels, working capital, and then converting to the full SaaS model.
Yeah, good. On your Series A, what's going to be your market valuation?
Yeah, I mean, we're flexible depending upon who we're working with. I would say we did the convertible note we did in August was at an $8.5 million cap, but we're really growing the revenue pretty substantially. So we'd like to be in the kind of 15 to 20 pre to kind of make it work for the founders as well as existing investors. But we're flexible on that, to get the right.
So about double whatever your raises plus.
Yeah.
Okay. All right. All right. If you have a question, raise your hand. Let's see if we have anyone. We have Minda, then John, then Catherine, then Pat.
Patrick, thanks for presenting. This is super interesting. Was curious because you kind of flashed by some of the pricing and things like that. Wondering about the capital that's needed and how big of an expense this is, if it requires financing from you or anything like that. And can you tell me a little bit about the sales cycle?
Sure. On the capital side, if you take an example right now, our quarterly revenues are in the kind of 250 to 350 range. And we have about 200K in receivables and about 300K in inventory. So, we're trying to be a little bit more effective on that. We're kind of a small fish with our suppliers, and with our customers. So we'd like to kind of manage that down to being at about 45 days on receivables and 60 to 90 days on inventory. We're not quite there yet, but that's kind of ultimately where we want to get to on the long-term financial model. Sales cycle, I mean, it is a annually cyclical business. You've got basically, you do most of the selling in Q4 after harvest. Kind of you sell through the winter, except through the holidays, all the way up till the time that they do seeding. So Q4, Q1, Q2 are pretty big quarters, and then Q3 is seasonally soft. When you deploy to an initial customer, I'd say probably 90, 95% of the customers we're selling to in the field crop market are already using soil sensors. So they're sold on the value of soil sensors, and we're kind of selling them on the software and the permanent install. So in that case, they'll purchase maybe, 3 to 4 units in year one. This is a farmer that may be deploying 25 to 30 units. Year two, they'll convert, more than half of their business, and then year three, they'll convert the rest.
Yeah, try to make your answers a little tighter and shorter so we can get a lot more questions coming up.
Sure. No
John
problem, Dave.
Harbison?
Yeah, a great presentation. I get the cost advantage of the permanent installation, but can you compare, contrast the effectiveness of the sensor of the competitors, which are higher up and operating in the root zone where you're most concerned, as opposed to you're further down and presumably below the root zone?
Yeah, the roots actually go pretty deep in kind of these, what they call deep-rooted broadacre row crops. Roots can go 4 to 5 feet deep, sometimes even deeper in no-till. There is a desire in some cases to kind of measure that top 12. So we have the ability to add a topsoil sensor with the above ground telemetry. There's a connector that allows us to do that. Some customers want that, some don't. Some crop types, we also will just deploy a top sensor with our software. Some of the stuff we're going to be converting that's existing deployments will be that type of an opportunity.
Thank you.
Right. We'll go to Catherine, then Pat.
You started with California and have gone across the country. I assume it's because California is fairly penetrated. Can you talk about what penetration you have? Is it based on sort of tackling existing adopters, or do you have greenfield players in there as well? Number one. Number two is you have a 600% growth. Sorry, 600% growth for next year, and then 400% the year after. Those are very ambitious. Please defend.
Sure. So those are tough questions to answer in a short time, but I'll do my best. If you look at our sales funnel for 2021, it's very defensible. I mean, we've got about $5 million already in the funnel, and then we've got these opportunities of software only, which we're not really fully accounting for. The key to 2022 is international expansion by raising more capital, as well as continuing to build out our dealer base. There's enough business out there and the market's big enough to get there. It's really a matter of kind of getting the right number of feet on the street. What was your first question again?
Talk about the California penetration by way of, so we can learn from that.
Yeah, California was really, while we were developing the wireless underground system, we did have a soil sensor that one of our founders developed, and we had a better kind of price performance in the permanent crop market. We're not as differentiated in that market as we are in the field crop market. So most of our investment has really been in the field crop market, but what we are able to do is the software investment that we've made. We're able to leverage that into the permanent crop market and provide a pretty highly differentiated solution more from the software side. So we'll continue to be in that market, but that's not where we're making most of our investment. That's just where we got started because that's what we had to kind of pay some bills while we were developing the wireless underground system.
All right, we're going to go to Pat, and then we'll go online for a few questions. Pat Wang.
Yeah, I like your product. My question evolved around, so I'm just curious about, because you make it a permanent fixture per se, a minimum of 5 years, so I imagine it costs more to install. So I'm trying to do a cost comparison of the cost between the annual versus yours, and I know your value proposition is the root is healthier, so you save 25% per year on the crop, but right up front, does a farmer have to invest more for the system? And because those are foreseeable costs, but the saving is something you have to extrapolate down the road. So can you give me a little insight to that part of it, the cost comparison?
Yeah, so the installation cost is actually very similar with our system versus an annual install and removal, but you only have to do it once every 5 years. So every time you roll a truck, it's between $250 and $350 to do an install, paying for the dealer and the equipment and everything like that. Our equipment on the sale model is a little bit more expensive, but when we move to the annual subscription, where it's subscription only, we're very comparable to what's in the market today. We do charge kind of an activation fee like you would get on a cell phone for year one, and then it's pretty much the same as where the competitors are kind of going forward. And we think we can make those economics work very well. In fact, as we get volume on the product, the cost of goods sold should drop pretty substantially. We're kind of suffering from not having, a ton of volume right now. So
I'll make it real quick. Then if you had to last 5 years, is there a concern of weather or other? Because if you do it annually, you don't have to worry about losing. Even if it doesn't work, you plan another one next year.
Sure.
The 5 year, there's other, uncontrollable variable like weather and so on, so
Yeah.
forth. Or is it that you're deep enough, you don't have to worry about any of that?
yeah, I mean, we've done the right level of temp cycling and humidity testing and, basically doing all the things. And now we've been deployed for, 2.5 years on our longest term deployments. The battery life looks to be running right where we're expecting it to, which is more like in the 7-year range. And we haven't seen any issues with kind of temp cycling or anything like that. The reliability on the product has been extremely high. It's all solid state and it's fully encapsulated, fully potted. So it's, we haven't seen any issues with that at all.
Okay, thank you.
Sure.
All right, a few questions online. Short answers, please. What are the other criteria other than moisture do you measure? Nutrient levels? Iron?
Moisture and temperature today. If there were a micronutrient sensor in the future, we could easily attach that to our system.
Right.
But that's
Speaking
not
about
available in the market
sensors,
today.
are the sensors off the shelf or is there custom hardware?
They're off the shelf. We have our own soil sensor we're deploying in the permanent crops, and then we use third parties that are kind of off the shelf standard products from currently AquaCheck and Centec in the field crop market.
All right, partnership capability. Are you partnering with some associations, for example, maybe the National Corn Growers Association or the Broccoli Association? I made that one up.
Yeah, we've done more with the Irrigation Association, and then we do have some farming co-ops and then kind of region by region. For example, in the Texas Panhandle, the North Plains Groundwater Conservation District. So as we enter markets, we do some partnerships and we have some academic partnerships. The bigger opportunity for us is kind of with some larger strategic partners we're working with.
Got it. Okay, so when you look at your competitive slide, this is from Ron, what would be the most important dimension when viewed from a potential customer? So if I'm a farmer, what would be the most critical thing for me?
Yeah, the permanent install with the irrigated customers is enormous because you get better scalability, you get a lower total cost of ownership, and you get data to manage your water that you currently don't get in the annual install and removal. So that's today. What we're doing from a product roadmap on the software, that will change over time because nobody's providing kind of the integrated solution today that would be the precursor to automation.
All right, so this is from Barbara. It says in your deck that only 10% of the farmers use soil sensors, yet you say in your pitch that 90% use soil sensors. Is that because of the size of the farms?
No, what I said was 90% of the business that we're converting is from customers that are already using soil sensors today. So the actual installed base is 10%, but what we're converting is we're typically converting customers that are already sold on the value of soil sensors. So we're selling them based on the permanent install as well as the software.
All right, I'm going to let Gerard have the final question.
Yeah, just can you give us a feel for 3 to 5 years out, what percentages of your total book of business would be wheat versus corn versus soybean versus field crops, just to kind of give us a sense of the book of business? And if I'm a corn farmer with a quarter section, what does it cost me to put this in?
Yeah, so in corn, that's the biggest, then followed by beans, soybeans, and then they use rotator crops like cotton, winter wheat, sorghum. Alfalfa is also a decent sized business for us, but those will be, that's the field crop market. That's 85% of the irrigated acres in the US and the vast majority of rain fed. So those will be our biggest market opportunities. Kind of breaking it up by percentage, hard to do like on this call, but we could easily do that for you looking at the USDA data.
Okay, and just to let you know, I'm highly enthusiastic about your center pivot market opportunity.
Yeah.
in the irrigated wheat market. I think if you can do that, you got a home run.
Oh, thanks.
Okay, we're done for the
All right.
questions. If anyone has any comments they want to give to Patrick, put your hand up or just yell it out.
Yep. All right. Anyone for Patrick? Any comments?
Anyone have a large farm you need this installed in? Do we have cannabis farms? We're going to go segment down here. We have Greg with a cannabis farm. I got a bid there. Oh, is that? Sorry, I thought you were raising your hand, Greg. Any comments?
That's Amy. Go for it, Amy.
I just wanted to congratulate Patrick. We had a lot of good contenders in the clean tech round and they won, and just want to say nice job pitching, and we're really optimistic about your path forward. Thank you.
That's really good. Thanks. Anyone else? Comments for Patrick? All right, going once, twice, gone.
Sold.
Right. So Patrick, thank you so much. Great presentation. Attendees, if you can leave the Zoom session, it would be great. Judges, if you could stick around for a few minutes, it would be awesome. I think that was some suggestions from previous judges before, and it's been working out well. So
thank you so much. Appreciate everybody's time, and this has been a great event. Thanks for everything you did on this, JJ.
Oh, thank you so much. All the best.
You too.
All right. Okay, so we'll wait for the attendees to leave, and then we will have a short discussion here. Almost gone.
Hey. I do have a question for the TCA people. Of the deals that you've seen today and the deals that you've seen in your other participation, if you can send me to dfriedman@prodigy.net, my email, which top 3 deals you like, that would be great. We're going to look at having a special session or integrating these into our pre-screening or screenings as we go through. I mean, one of the purposes of participating with Pismo, as you are well aware, is for deal flow, and there's some really interesting deals. And many interesting too, many of them, as you probably know, for TCA, we've actually funded or at least have seen.
Yeah.
So Dave, there's another session next week. So do you want 6 altogether, or you only want 3?
You can keep, I mean, you can give me 3, you can wait till next week. We're not trying to get surgical precision here. I mean, I'm not a doctor like Greg or Thomas. I just want the bloody numbers.
Yeah,
David,
so
what is your email address again, please?
Yeah, it's
So
I'll put it in the chat box, but it's dfriedman@prodigy.net.
I'll send that out. What I'll do is I'll send out to everybody and ask everybody to give me their top 3, and that way I'll send it to you. So it's
yeah, perfect. I appreciate that. Thanks.
And JJ, I would like to emphasize, I think your rubric is helpful. This is just complimentary information for the TCA group.
Oh, no, I get that. Yeah, I saw your email too.
Yeah.
I think, part of what the changes that we would make if we to do this next time around is maybe have, maybe just 5 questions would be problem, solution, how big the market is, and are you interested in investing in this? Something like real quick, instead of some of these questions maybe a little bit more too granular. So maybe 5 questions instead of 10, and then trying to concentrate on if there is really a problem, if there's really a solution here, and maybe ask if investors are interested, judges, in investing in this. That makes it much easier to kind of decipher versus more kind of what you're saying, Gerard, more academic type questions to some extent.
I'm going to say that I actually appreciate the more granular, first of all, the scoring, to have so many boxes gives you a chance to get much more granular about how you feel, but I actually like all of the different judging criteria that you put forward. So
I also think there's value for the entrepreneurs. I think that if all they get is just you know, do I want to put money in it? I think we send the wrong signal.
Yeah, I don't think
Value of
anyone,
the competition.
I agree with you, Gerard. We're not investing off of this deal, but we use this as a mechanism to get to the next level of tell me more.
Okay, good comments. Thank you. Because I was also taking into consideration Bob Warshower's comment that he wants to invest and he's thinking about, okay, they might have the great presentation, just like what Catherine said. It was slick presentation, but do you want to invest in that? I don't know, right? So if someone has a great presentation, it still may not be an investable type deal. So
I think we should open our cryptocurrency and crypto hedgehog and, split it up among the top two.
All right. So just Jude, quick.
Do you want the top? If we're sending you a top three now, then do you want it just the top three of what we've seen so far, or do you want, if we're sending you a top
wait
three?
till next week and send me the top three. You can send me the top three.
I think it makes more sense. Wait.
I'll send an email to everybody, and it will be the top three overall. That's what we'll do. So
we should get enough. We should get a lot out of that.
Well, let's just quickly talk about today. Which one is your top today? Let's see. Anybody?
Grow Guru for me.
I'll second that.
Yeah, it's kind of, I would go with it also, even though I think we rejected them the first time around.
Okay.
I'll just, I obviously like Grow Guru. That's pretty great. I did think Express Cells was interesting. I really can't get past like the level of ownership kind of stuff, but it very interesting company.
Okay.
JJ, I like Grow Guru as well, and obviously I got to see it the first time through.
Right.
But I do say that it benefits from being later stage than a lot of the other things that were in the clean tech side. And so I think there's just an inherent bias that because, they've got revenue. I mean, a lot of the rubric benefits them at the expense of, I think, other things that were in the clean tech, arena that could end up being much bigger and better investments.
Okay.
I like AG Tools as well, almost better in terms of their business model because it's software and because it's data driven. Grow Guru has a hardware software combination, which always is a little bit harder. Having said that, in my old age, I have decided to bet on entrepreneurs. And if you compare the two, I would say there's no question, hands down, Grow Guru wins.
Yeah, I would agree with that. I think from a data perspective, that was the one I was most inclined to be interested in from an investing perspective. But she really couldn't dive into really those specific use cases that we were trying to get from her. And so like the depth of understanding of how people were going to use it and how frequently just really didn't have that customer understanding or appreciation. And so I couldn't get past that.
I agree. From the quality of the Entrepreneur Go Guru was the best of this bunch. I mean,
I wanted to like the AG Tools, but to your point, it seemed like it was more of a solution in search of a business case. Came up with some nice graphics to illustrate her value proposition, but I wasn't convinced.
Very interesting, Ron. I'm going to say, Roland, I'm going to say that's how I felt too.
As well as through the fund.
Yeah, I like Back Tools. I felt a little concerned about the team. Nothing wrong with family-run business and all of that, but it wasn't broad enough to have that vulnerability sort of addressed from a risk management perspective, in my view. I would like to see them have a wider team just so there's, backup or what have you needed.
That's a good point, Amy.
I actually liked of this group. I've looked at Grow Guru before, and I didn't, frankly, see the same degree of progress that I had been hoping to see since the last time I saw them, which was nearly a year ago. I kind of like the group that what do they call themselves? Not the Hedgehog, the other one.
We didn't hear you, Howard. Speak louder.
Hi, can you hear me now?
Yeah.
I'm looking for the
Cast 21.
No, the other one.
Crypto Hedgehog.
No, not Hedgehog. The
Express cells.
express cells.
Okay.
But I like them as a business, but there are enough things that didn't make sense to me that based on their presentation, if we had had more time and I could have drilled into 2 or 3 other questions, I probably would have liked them best.
Okay. All right.
I'll just throw out a plug for, I love the product for Cast 21. I think that's something that could be, futuristic. Not necessarily the top deal today, but I think really interesting as a technology.
Oh, I think also from a consumer perspective, kids would love wearing that. People would just, I mean, there is sort of a fashion element to it too that I don't know that we really delved into.
I showed my 8-year-old. My 8-year-old wandered over during that, and she was checking it out. She's like, "That's pretty cool." But I don't know the competition. When I filled that part of the scoring out, is anybody in that space and knows, does this already exist? Is there something similar? I just don't know.
We've seen similar kind of things that alternatives to CAS. I forgot the names of them. But the problem that she has, and I think Jeff Koenig pointed it out, is they need to really figure out a way to get 10x in terms of the penetration and their go-to-market strategy. Let me put it in my New York way, kind of sucked.
I was kind of surprised that the ag tools didn't do a little bit better. I mean, they had a pretty comprehensive approach to maximizing income throughout the entire agricultural chain, as opposed to just saving water or saving some resources.
I don't think she did as good a job, John, as she did in the past, frankly.
Well, that's kind of what I think I noticed, is that, it didn't seem like she was on her game, but I kind of thought the whole concept of that was pretty good.
She was very, very rushed in her presentation, which actually caused a lot of confusion as opposed to clarity. And that's a problem. It's a stylistic issue, I think.
But she doesn't have, when she came to TCA, she didn't have, she was better when she pitched to TCA.
She had more time.
Yeah, it's a different environment.
She had the same amount of time as today, Gerard, right? 12 and 12. She had same time.
Yeah, I'd like to just, I would be very interested, and I think it'll be informative to you, JJ, if people would raise their hands based on what you saw today, how many of you would pick one or more that you would put 5,000 or 10,000 into an SPV? It'll give JJ a sense of whether that's going to get off the ground.
Okay, raise hands on the. Okay, no, raise your hand. In Zoom. So
from
that
today,
way,
or from any of the ones that are finalists.
Yeah, in Zoom. If you could raise your hands in Zoom, because it was hard to see. I have multiple.
What's the question? Sorry, I missed that.
Would you invest in an SPV in any one of these? Not picking one in particular, but is the SPV idea worthwhile?
Just these 5, or
it depends. Does the SPV also end up? I mean, the question is going to be pro rata participation in future, info rights, as well as are there any fees involved besides expenses? So
all those details I would assume would be worked out, but right now it's just if an SPV did exist, would this be something of interest?
I think they're looking at a 3.5% back end. Wasn't that it, JJ?
No, it's different because there are other things, but we'll send them out.
Okay.
Shaheen, are you still on board, Shaheen, here? I don't know if he's still.
Yes, I'm right here. I raised my hand. I'm one of the guys that definitely wants to invest in a few of these companies.
Right. So we'll send the details again if they're not no obligation whatsoever. So it looks like we have 10, 11 people that are potentially interested.
JJ, I have a question for you.
Yeah.
I mean, is it anticipated that these companies can basically go individually to any of the Tech Coast Angels chapters and present individually, or what's your feeling?
Yeah, so part of what we we had talked to David and others in TCA, and not only TCA, also part of the angel groups that are part of this part of the Zoom today, including Catherine, Amy. I can't see everybody, but Barbara as well. So they're interested in looking at the winners and to see if they would invest directly in them as VCs or angel groups. So that is part of the, if you want, being part of this, the competition and part of the winner. So these 10 are given the opportunity to present directly to the different angel groups and VCs. So we have 42 different VCs and angel groups that have already accepted or agreed to see them without any, kind of fast track them to their screening to some extent based on whatever their process is, instead of going through the normal vetting process.
John, one of the reasons to get the top 3 from everybody is to help David and the people at the Tech Coast Orange County chapter line up the ones that would be the best to try to squeeze in this year for the Chapter Fund 20, where we have just 2 months of window.
Yep.
Right. So we have just about $1 million that we want to burn. Is that what it is?
Less than
I'm not
that.
sure burning would be the right word, but yeah, we have money to spend.
Okay. All right. Well, yeah, not burning the right word, of course, but that's true. Okay. So I think everybody agrees. Maybe it's Grow Guru. Maybe it is some 1 to 3 Grow Guru AG tools, maybe Express Cells. It sounds like about the 1 to 3. I want to ask the doctors that are still on board is, what about Greg and Mr. Whitco's here? What are your thoughts about CAS 21? Because I'm very interested in that one. It sounds like it could be a game changer, isn't it?
I think it would be, but what they need to do is they need to approach something like Kaiser or the VA system. Instead of going to individual clinics, they need to get into a health system and get thousands of customers instead of one customer. And then in terms of customer, I mean the people that are actually going to be applying the CAS. So, I mean, that would make a lot more sense.
Yeah, and I'm right there. I'm really excited about CAS 21. I think they've got a great opportunity and a great product, but boy, they're limiting themselves way too much. But it's truly a game changer. And as you start thinking about the field applications of something like that, it really is pretty phenomenal.
Very interesting.
Before everybody gets too excited about it, coming from somebody that's broke a lot of bones in their body on motorcycles and playing football and you name it. The one thing that got to me about that was it was a really cool idea and the technology was really cool, but the way a cast is made, it's insulated. It has a lot of, even on the outside, it's one thing, but on the inside, it's wrapped with something that is nice and smooth and doesn't, no pressure points on anything. And that thing looked like after a while, it could rub you to death. So I don't know.
I agree. That's why I think they need clinical trials to show that they don't actually cause any form of wounds. And I think as a clinician, I would not use it until I actually had proof that it is better or as good as the current treatment.
Yeah, if I can chime in, can I chime in? I'm not too crazy about that company. I have to beg to differ with a lot of the other people. I don't like their go-to-market strategy. I mean, most of the bones are set in ERs and to approach orthopedic surgeons for more simple fractures. I mean, that market isn't as big. The other thing I don't know if I'm assuming it's radiolucent. I mean, there's much more than just applying a cast. I mean, you have to get an X-ray, see where the fracture is, how to set it, if it's set properly. I mean, they're talking about this thing. Yeah, we can just throw it in the field, and I mean, throw it on anybody that looks like they have a broken bone, and how easy it is to, the comfort factor. I mean, I think there's a lot more to this than what you're seeing just a 12-minute. I mean, you have to get the X-ray, reduce the fracture, set it, then you apply the cast, and you get another X-ray again. So, I mean, I'm not as high on that company as I think a lot of you. I could be wrong, but I mean, it looks neat. It looks like you can apply it really easily.
Thomas, my kids said they can't autograph it, so that's a problem for them. So
right. I mean, we have to look at that one a little deeper. I mean, it's a slick presentation and it looks neat, but the clinical efficacy is you need some clinical trials. I mean, how is this tolerated long term as well? So.
Yeah.
Yeah, I
Okay.
agree. And also that's why I asked her about the clearance, because the different hand sizes, how much support do you really have? And it could vary, depends on each individual, depends on how the cast was applied. And it sounds like it depends on the person that puts it on. So there's a lot to be looked at there.
I agree. I think the bottom line is it's very early stage. She couldn't really tell us. It wasn't founded by orthopedic surgeons.
Right.
And I think she has a long way to go. A very long.
Plus the $10 million valuation at this point is ridiculous. I mean,
yeah.
I mean,
she had a very slow growth strategy. I don't know if you saw her revenues for year 2. It was like $2 million and she was apologizing for it.
Yeah, that's basically what everybody's saying, right? The same thing. But I agree with you, Barbara. It sounded like it started by a couple of students. They don't have really any business strategy. Yeah. All right. Well, very good. I think that's it. Unless anyone wants to discuss any subject, any companies, we're open to that.
I have a question.
Good to see you all. Take care, guys.
Okay. Oh,
bye everyone.
Bye. Thank you.
Bye.
Bye. Take care. Thanks very much.